You have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions? Do you need to get bigger scale?
Well, look, as I said earlier, we're in a different place of the soccer field than everyone else. So we think if we could execute on this, own all those passion brands globally. Scripps never took food and HG and cooking and travel around the world. So we have an opportunity to take all that IP, we'll convert it into 48 languages, and we'll start to spread it around. So that'll be a revenue synergy if viewership increases, and we think it will. In Latin America, we've bought some of their content. But I like our hand here. We got some work to do. We got to pay down some debt. We got to prove out that we're going to generate that free cash flow and that we really did build a moat. But at the same time, we're going to be working really hard about learning how consumers consume content on devices. And we're talking to every distributor, because we're better off if somebody that's already in business with you,
order filled,
and you're already paying a
$100
bill,
order submitted,
and then have a chance to check a box and pick us. Today in the U.S., there's probably 25 or 30 million subscribers that are broadband only. The one service that's being marketed to them heavily is Netflix. And the industry built us, we built them, and together I think we're going to come up with something that's going to be pretty compelling in terms of a skinny bundle, because it's not sensible to have Netflix have all that field without us on it.
You said you need to pay down some debt because you do have more debt on your balance sheet than a lot of other media companies do. You've said you're going to save $350 million a year on Scripps. How are you going to do that? That's a lot of money, as you and I both know, to save in an operation.
Well, look, as we've looked at putting these businesses together, and it's early days, it's only been 5 weeks, but we've been working on it very hard for 6 months going up to it. We think that's rather conservative. These are one-over-one companies. We have 12 channels in the U.S., they have 6. So we're in the same business. We have 220 research people, they have 140 research people. We have 650 salespeople, they have 550 salespeople. And their people are really good. We put some of their people in charge in our new structure. And the idea is, who are the best and the brightest? Because when we looked at it, we said when it comes to nonfiction, who are the best 2 producers of nonfiction content, and who is best at monetizing it? And we looked and we said, in some areas they're better than us, in some areas we're better than them. We put these 2 together, and we will spend $3.5 billion on content, maybe growing to more than that. This is a hard business. We're in the business of creating stories and characters and getting people to turn on their TV and love it.
You've referred a couple of times to John Malone, who is a shareholder, doesn't control your company by any means, but you know him well. What is it like to have John Malone as somebody you can call up and say, should we do this, should we do that? What do you think about what's going on?
Well, I think about my last 30 years in this business, and it's sort of like what you want for your children. You are who you hang out with. And it really helps define you, the narratives that you hear, the questions that you hear. And so I look back over the last 30 years and 15 years listening to why Jack didn't want to do an acquisition that we brought him, or what we need to do with cable, or how we need to do it. Bob Wright, one of the most successful guys running NBC, the Newhouse family, Donald and Cy Newhouse, and Bob Myron, who's a genius and has been in the cable business and built Bright House, and John Malone. And so when I think about where people should be spending their time, yes, you'd like to get the right job. Yes, you'd like to think that you're going to make some money. But I took a 50% pay cut to go to NBC from a law firm because I thought I can get to hang out with the guys at the Peacock, and maybe someday I'll get to meet Jack. And a lot of the way I see the world, I still talk to Jack all the time. So I'm hearing Jack's voice, I'm hearing Bob Myron and Donald Newhouse's voice, and I'm hearing John's voice. And so for that alone, I'm one of the luckiest guys.
It strikes me that you're now running
Order
Discovery,
filled.
which really appeals in the United States to a lot of the middle of the country. People that the President of the United States probably wouldn't object to. In fact, I understand the President of the United States is a fan of Shark Week. Actually, I read that someplace.
I hope he's a fan of a lot of our stuff. I think, I hope.
You helped create MSNBC.
Order
that
submitted.
is a channel in a very
Order
different
submitted.
place.
Order
what do you
submitted.
think about the media
Order submitted.
landscape
Order
in the United
submitted.
States in terms of politics? Because it seems to become much more polarized.
Well, I can just say that the business changed. When we launched MSNBC, Brokaw and I and Andy Lack and Tom Rogers, there was a group of us, and Jack said, we're going to launch the best news network in America, and we're going to use the #1 news division in the world to do it. We had this amazing library. We structured a deal with Microsoft to get them in. They wanted the library at the time, and that was our ambition. I'm not going to game out the different news networks in America, but we have to be practical and recognize that at least some of them are following that model, because you on the one hand you want to do the best journalism possible. On the other hand, you want people to watch you, and you want them to watch you for as long as possible. And part of the way we as human beings determine our success is, are we in third place? Are we in second place? How many people are watching us? How many people love us? And so I think that's the journey. And luckily, I'm not going to be one of the guys to figure that out.
Well, but let's talk about how you keep score. That leads us exactly to a great conclusion here. How do you keep score? I mean, I see that now you've jumped up in the rankings, actually, including broadcast and cable. Big step up with Scripps. Is that the way you keep score? Is that how you just tell whether you, David Zaslav, are succeeding?
No, because there's lots of books that have been written about, more scale tips you over. So we're staying in our lane. And what's going to be successful for us, and we've made this decision. On every one of our channels, we've said, if you don't love us, if you're not one of the passionate viewers that loves survival, if you're not one of the people that love science or that love crime, go find some other channels that you love. When we're creating content for our channels, we want global audiences that really affiliate and have a passion for our characters and our message. And a big piece of that is we're not going for the best rating. We're going for the most potent audience that says, they get me. When I go there, I see something that I love. And if we put something on any of these channels that looks like we're going for ratings, they'll immediately say, what's this doing on here? And so they're quite clever, and you just got to continue. This is what we do for a living. Figure them out on TV and try and figure them out in terms of the devices as to what they're going to love and what they're going to pay for.
David Zaslav, thank you so much for spending time with us today.
Thanks, David. Good to see you.
Coca-Cola, a 130-year-old iconic brand and a dominant force in the $800 billion soft drink industry. Synonymous with globalization, Coca-Cola operates in over 200 countries worldwide. The beverage behemoth now has a new CEO. James Quincy spent the last 2 decades rising through the ranks at Coca-Cola. Now, as head of the company, Quincy aims to win over a new generation that shuns sugar, and to show the world that he takes the environment seriously, even as he adapts to a new world of technology. James Quincy sat down with us for an extended conversation. We wanted to understand how he plans to use innovation to transform every aspect of Coca-Cola, attempting to change its culture while managing a global checkerboard of regulations and tax regimes. Coca-Cola operates in a lot of different countries, which means there's a lot of different regulatory systems, a lot of different legal schemes you have to really adapt to. Let's talk about a couple of those. First of all, the United States. The tax cuts. How does it affect Coca-Cola?
Yeah, we're still working through the numbers. I mean, our tax rate last year effectively was about 24%, so it's not the biggest change to us. Because we're an international company, the absolute rate hasn't affected us as much as perhaps some of the more domestically focused enterprises. But we're positive on moving the territorial system. So we think the simplification is positive in the long run. To the extent that it helped create more demand, that will be good news too. We're still working through the numbers that we'll lay out on our earnings call. Of course, we're part of having some of the money overseas, but in the end, if it generates more economic growth, that will lift all the boats.
Does the expensing of capital investment affect you at all?
Not in a great amount. I mean, it will make some difference. We'll lay that out, but that's not the biggest moving piece for us.
And if there is significant incremental cash available to Coca-Cola, have you decided yet, does it go into capital investment? Does it go into buybacks of shares? Does it go into dividends?
I mean, we weren't short of cash at the end of the day, so we've been a successful company. We've got the resources we need to invest in the marketplace. We're still working through exactly how the puts and takes work, because obviously you've got to pay tax on the cash first, or in addition. So we're looking at how we use all that and how we make the right capital allocations.
One of the really big issues for the United States right now is the so-called dreamers. These are the young people who are brought here as children. And the question is, do they get to stay as adults, essentially? Do you have at Coca-Cola people who are really uncertain about whether they can stay or not? There are about 700,000 nationwide.
Yeah, we have some people in our company and in our bottling partners who fall under the Dreamers or the Dakar program. We would love government to find a way to make proper underlying immigration reform, and including finding a solution for the Dreamers so that it's not so disruptive and that they can stay. So hopefully they'll find a path to that. Of course, partial solutions may be necessary, but we would love to see fundamental reform.
You ran Mexico for Coca-Cola at one point, so you have seen this issue on both sides of at least our southern border. Do you see a path forward, a constructive path forward on immigration?
I think there's a path forward, but I think it also is connected, and it can't be completely disassociated when you think about long-term fundamental reform from getting both economies to grow. In the end, part of what drives the informal immigration is the disparity in the economic outlook. So having a community of North America where all the economies are growing actually helps solve that problem too. So I think leadership from the United States to drive growth will help solve some of these other issues too.
You've also seen NAFTA from both sides of the border. You've seen that issue, which is another hot issue right now in the United States. Has NAFTA overall been good or bad for the United States?
My view would be that free trade deals are good overall for all participants, and I think it's been good for North America and all the countries in it. Doesn't mean it's perfect. Very few free trade deals are perfect. So can it be made better? Yes, I hope they can make it better. But I don't think we should start deconstructing global trade. I think it's been a powerful engine for lifting all boats. It doesn't mean it's solved all problems. There are questions of income inequality. There are questions of not all the rules were perfect and need to be improved. But let's go forward, not backwards.
So when President Trump first came in, he was very closely allied with many people in business. He consulted, and he had panels that he talked with as well. Do you get to talk, either President Trump or the administration, about things like NAFTA? I mean, do they consult you, or do you make your views known to them?
When there are things where we have a view or it affects our business, we make our views known either directly to the administration or through many of the business forums, like the Business Roundtable. There are enough points of intersection collectively and individually with the administration that they know what we think.
So from that, do you have any sense of where we're headed with NAFTA? Because there are conflicting reports. I mean, the Canadians seem to be preparing for actually U.S. withdrawal. There are a lot of people in Washington say, no, we're not going to withdraw. Do you have any sense from your point of view of where we're headed?
My view on negotiations is you've got to let the negotiators negotiate. And if you're not in the room, you don't know what the answer is until it comes out. So I think the important thing for those that aren't in the room is to keep saying what they believe to be true, what they believe to be the areas where things can be made better. And then the negotiators have got to get in the room and thrash it out, and trying to work out what color the smoke is coming from the room doesn't lead you anywhere until they come out and tell you what the answer is.
Your native country has voted in a referendum to leave the EU. And I won't ask you what you think about that, but tell us how that's developing. I mean, is there a soft landing there that you can see? How would we get to it?
Order submitted. Order submitted.
It does a bit go back to my point about negotiations. You're never really sure until till the cake is cooked. I think the logic of the economics is a softer rather than a harder Brexit. I think in the end, whilst it won't be a catastrophe one way or the other, life will be better. There'll be more economic growth if it's a softer Brexit, but there's a lot of details and a lot of different points of view to work out, because in the end, the referendum wasn't between do you want this or that. It's like, do you want this or not want this? It wasn't a referendum around the version of the exit, which is kind of where we're trapped at the moment. And of course, there's a lot of negotiations going on.
Order canceled.
It's very important to get it right
Canceled. Order
for the
canceled.
UK and to some extent for Europe as well.
Whether it's Brexit or whether it's NAFTA, how do these trade issues affect Coca-Cola's business?
I think one of the great benefits of the Coca-Cola system is we're global, but we're extremely local. I mean, we manufacture in every country virtually that we sell in. Virtually everything that's sold in the US is made in the US. Virtually everything that's sold in Mexico is made in Mexico. Virtually everything that's sold in the UK or France is made in that individual country. So the global trade restrictions or openings don't tend to affect us heavily in the moment. To the extent that they reduce or increase total economic growth, that's what matters to us. And so I think philosophically, we're pro global free trade because it drives economic growth. Therefore, let's focus on making those deals better because it'll provide the wealth to then solve a lot of society's problems.
You came in and took over Coca-Cola and really trumpeted innovation as critical to your future. I believe you have a chief innovation officer, but maybe you're the chief innovation officer in some sense. How do you innovate in a 130-year-old company that's so well known around the world, has been there for so long, has such an entrenched perception of people's views?
It's hard. I mean, any institution that's been around a long time, whether it's a company or a government organization or any organization, it's going to be very hard. So I think from my point of view, if I'm not the chief innovator, I'm certainly the chief agitator for innovation. And what that means is, driving the culture to try and do a few things upon top of everything else we do. Stay curious. If we're not curious about the outside world, about the consumers, about the customer, about what's changing, how will we innovate? But curiosity just leads you to an insight. It's very passive. You need to drive empowerment so people feel they can go and do something, that they're not waiting for head office to make the decision, that they can get up in the morning and go and do something. And I think the next thing is you've got to be inclusive. You've got to try and connect the pieces because we've got a tremendous global knowledge and tremendous global system. Sometimes your idea has already been tried somewhere else. So connect to the other parts of the system. And lastly, we probably fell into the trap of trying to make things perfect before we did anything in the past. No, we need to learn from some of the software companies, have version 1.0, 2.0, 3.0. That gets us both innovation and speed. And if we keep pushing those four things, I think we'll make progress.
And how do you know? How does James Quincy know whether you're getting the innovation job done? And I mean that in the sense you're sitting atop a very large organization, a lot of people spread around the world. How do you judge whether the word's getting down and people are already changing their behavior?
It's hard to know, but the only way forward is to look for multiple signals. No, there's no one number or one metric that's going to give it yes. So we have employee surveys where we ask people. We can look at the sales number and measure the success rate or the number and the success rate of the things we put into the marketplace. We can look at what our research and development pipeline is generating, and are we really getting new patents? Are we really making progress? So I think one has to have a dashboard to look across and say, is there progress?
How is technology changing the way you do business, and for that matter, your workforce?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. Objective reporting that you can trust. Curated comments that provide
Order
insight.
canceled. Order canceled. Order
TikTok
canceled.
by Bloomberg. 24/7 news streaming live on Twitter.
Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order canceled. Order submitted. Order submitted. Order submitted.
Technology. It's disrupting just about every company that we know of today. How is it affecting Coca-Cola? And first, talk about how it's affecting your relationship with your consumer. How you deliver to your consumer, things like e-commerce, how you market to your consumer.
Yeah, I mean, we kind of look at it in three buckets. How we engage with consumers, there used to be TV advertising, now there's social media. The ways of engaging with the consumer are changing rapidly. Who the customer is and how the shopping actually happens is changing rapidly. And of course, internally, it's changing rapidly. With the consumer, around the world, TV is still the biggest vehicle, maybe less so in some of the developed economies, but around the world, it's still the biggest vehicle. But a lot of it's going into social media. We work closely a lot of with a lot of the new tech companies in social media, trying to find ways to continue to have a brand role. I mean, in the end, someone's got to pay for the content to be developed, whether that's through advertising or sponsorship. So I think there's a lot of change going on. We're adapting. I think we feel we're kind of towards the front end. But what I'm totally clear of is going to be different in 5 years, and it's going to be very different in 10 years. And we're going to have to keep investing in innovation and keep evolving to stay close to the consumers.
As you look around the world, which markets do you see the fastest innovation when it comes to e-commerce? When you just sort of get on your app and you order something up, it gets delivered, for example. Is it China? Is it the United States? Is it Europe?
Order canceled.
I actually think that places like Shanghai and some parts of Western Europe are on the cutting edge, along with some of the bits of the U.S., but really at a par. I mean, the U.S. in many respects, there's a lot of advanced e-commerce, but I can tell you it's very advanced in places like Shanghai and Western Europe as well, and the penetration of e-commerce in aggregate is even higher in some of those places than even the U.S. So, when you want to learn what's going on, I would be just as tempted to tell you go to Shanghai as stay in New York.
And how do you market in that circumstance? I mean, we're used to going to a fast food restaurant, for example, and there's a Coca-Cola there. It's on the menu.
Yeah.
So let's have that Coke or that Diet Coke.
Yeah.
You don't have that when you're on your app.
No, but you have to get it. I mean, if you went back even 2 or 3 years in China, for example, when a lot of the apps and the mobile payment systems came in, we weren't on the menu. Actually, even worse, we were trying to sell perhaps a returnable glass bottle to the restaurant, which had no way of being in the delivery system. So we've had to re-engineer our business system very quickly to both be present on the app. So what's the virtual representation of what you'd normally see in the store? And how do we change the packaging portfolio so that we can be part of the delivery system? And you have a lot of places in Shanghai where food ordered on apps and delivered is 30–50% of the restaurant sales.
That's the relationship with the consumer. Talk about Coca-Cola as Coca-Cola. How is technology changing the way you do business, and for that matter, your workforce?
It's changing it in lots of profound ways. I mean, in simple terms, you go back 10, 20 years, we were a large company and we're one of the few that could afford to invest in expensive IT systems and do our own stuff, our own programs, our own server farms. You wind forward to today, that's no longer the model. We've had to move to the cloud. We've had to move to standard programs that whole industries use, and we've had to use the mobile. The one thing I always say to the IT department is, just put it on the phone. Everything can be done on the phone. Let's just move everything to mobile on the phone. The old days of IT had training budgets. Why? Everyone knows how to use the apps on the phone. So it's profoundly changing the way that we work, and I think it's going to continue to flow through the organization. We have a big program of digitizing the company.
Does that translate into fewer employees as a practical matter because of the efficiencies from digital?
I think for sure it changes into a different profile. I mean, people are having to adapt to doing things in a different way. We've actually made a lot of changes in our IT departments to move to a different skill set. So it's certainly changing the nature of employment and the sorts of profiles you want. Whether we buy the services ourselves or we buy the services or do it ourselves makes a difference as to where the employees are. But net, more employment's being generated in the economies.
So can Coca-Cola compete with Silicon Valley and the digital startups when you're trying to recruit the young computer scientists?
Well, Atlanta is a very fast-growing economy. The state of Georgia has been ranked, top 1 or 2 of place to do business in the U.S. for many years in a row. The local political system has done a great job, so has the city. So it's a very competitive economy there, and we do very well in it. We're happy to see Atlanta and Georgia growing, and they've done a lot to invest in tech startups and the media industry in and near Atlanta, and it's being very successful.
As you look toward really substantial growth in these new beverage categories, are you looking at acquisitions? Are you looking at organic growth? I mean, you have been inclined, I believe, to look for smaller brands, startup brands, bringing them along. Is that the future path to a significant degree for Coca-Cola?
I think it's going to be both. I mean, we have grown organically, but we have made these bolt-on acquisitions, as we call them, the little small ones, the niche brands. I think where we see that something is a really good idea, we invest in them. Sometimes we buy them, sometimes we just invest with them. But there's a quid pro quo. They get the capital that we inject, yet we can introduce them to the globe, not just the country that they've launched in. And that's helped us double the number of billion-dollar brands that we sell around the world. So I think it's going to be an and strategy rather than one or the other.
It's interesting. It's a total beverage company. It's not a food company. I mean, there are some competitors who said, let's become a food company, at least in part. Why did you make that decision? And does it make you any more vulnerable, forgive me for saying, but even to acquisition? I mean, you're what, $200 billion market cap? It's a pretty big acquisition. But there are some pretty big consolidations in the food industry.
Order canceled. Order canceled.
I think firstly, we're focused on beverages because that's where the greatest synergy and the greatest application of our know-how and our fabulous global bottling distribution system is. It's the thing that can be most synergistic with what we've already got. And the market for beverages is one of the best growing markets in the whole of the supermarket or in the other stores. So it's a great market. We have a good position. We can create a lot of synergy. So it's a question of choices. I sometimes say, never say never, which then causes confusion because people say, you haven't ruled anything out. I say, no, it's a question of what's most logical. And beverages are the most logical thing for us to do first because we stick to our knitting. In terms of how we think about the consolidation, in the end of the day, I'm pretty convinced that investors, gold star goes to those that grow with expanding margins. Growth is the name of the game. If the category's got no growth, then optimize the margin. Okay, but that's still silver prize largely over the long term. So I'm pretty clear. If we focus on driving top line growth, which we believe we can with our strategy of total beverages, we will attract an investor base that will be very happy with us over the long run.
By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic? World without waste, great goal. You have a big new packaging announcement. Why is it important to Coca-Cola, not just as a corporate citizen, but as a business?
You know, it's important to us for a very core part of our values. We've always believed that to have a healthy business, you need to be operating in a healthy community. And one of today's biggest problems is packaging waste. We've done a lot on making things recyclable. We've actually invested a lot of R&D in making progress on reusing it. What we need to do is collect it. So this announcement is about the big missing piece in generating a world without waste, which is collecting back the plastic and creating a market economy for that collected plastic. And I think that's going to do great things to help us grow into the future without creating waste, which is good for us and it's great for communities.
How are you going to attract all that plastic? By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic?
Well, to give you an idea of the dimension, we need to bring back, every person in the world, if they bring back 2 bottles a month, we bring back all our bottles. That's our objective. 2 bottles a month for every person. We collect every bottle we put out. How are we going to do it? Well, there'll be different systems in different countries. You know, every country needs a solution.
Order
but it won't be the same
Order
everywhere.
submitted. Order
there are
submitted.
kind of places where it's reasonably advanced in Europe to more informal economies where the collection happens. So there's going to be different solutions everywhere. We're going to have to work with NGOs, other industrial companies and governments to put in place these solutions. But it's absolutely doable. And I think that's what's exciting about setting the objective.
We're very conscious of this in the United States, but what about in other places, like China, for example?
Yeah, look, I think the emerging and the developed countries are where more of the problem is than the US or Europe, which is probably at the leading edge. So we need to do more there. But recognize that in a lot of these countries, there is some informal collection system already going on across a wide range of waste. What we need to create is the circular economy. We need to create value for that. So often in the case, and we did this in Mexico, for example, you go back a little more than 10 years, it was less than 10% of the plastic was recycled. Now it's 60%. How? The informal economy was collecting the waste, but there was no market for it. No one wanted to buy it. So we went into the marketplace and bought the plastic, invested in factories to recycle that and reuse it in our bottles. So I think there's a model there for the Chinas and other parts of the world on how to create value out of plastic and get it reused.
You've laid out a bold strategic vision for your company called Total Beverage Company. that includes things beyond
Order
Coca-Cola and
canceled.
even beyond
Order
Diet
canceled.
Coke.
Order
It goes on beyond
canceled.
that to these 5 categories. What's driving that? Is that basically to get away a bit from sugar drinks?
Actually, you know, we're following the consumer. When you look at what's happening around the world, as the world is urbanizing, as people have got more disposable income, they're spending more money on a range of things, including beverages. So what's important within that growing market of beverages is they want
Order
more choice.
submitted.
Different
Order
people
submitted.
want different things.
Order
so if we
submitted.
really want to be able to serve the customer, serve the consumer, we've got to follow them. We've got to get into more categories. Coke is likely to remain the heart and soul of the company. It's the world's biggest, fast-moving consumer good brand. But we need more. We need to offer consumers what they want all day long. We have to offer choice. And I think that's what's going to guide us forward. And in a way, it goes back to where we started. If we pay a lot of attention to what the consumer wants, they will take us to where the business needs to grow. And then it ultimately ends up in growth for the business.
I understand that on average around the world, people consume about 8 ounces of a beverage per day. And Coca-Cola, I was told, is about a half an ounce. What is your goal? How much of the market share of total beverage can
Order
you really
canceled.
take globally?
Order canceled. Order canceled.
I don't think there's a end of history moment when we reach nirvana. I think what we're looking to do is gain share every year. I mean, it's a competitive marketplace. We have a lot of well-funded competitors doing a lot of exciting things. So we're focused on is can we serve the consumers and gain a little bit of share each year and generate a growing business system that our objective is to create value for everyone who touches that business system, whether it be the economics of the people who are in the value chain like the customer, or even society with initiatives like the packaging one, you know, which I think builds on our heritage of creating shared value in the world. You know, 10 years ago or so, we set ourselves the objective of being water neutral by 2020, and we achieved it a few years early. So we return to the environment all the water we use, which is one of the things that gives us confidence that we can achieve this packaging objective. So we get business growth and doing it in the right way for society.
Okay, thanks very much. We're wrapping up there. This was terrific. Thank you so much. That was really fun.
Thank you.
Order canceled. Order canceled. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order canceled.
Welcome to Bloomberg Daybreak Americas. On this Wednesday, April 22nd, I'm Alex Steele. Here's everything you need to know at this hour. Let's take it right from the top.
turmoil hits the Brent price as Intercontinental Exchange now prepares contracts for negative
Order
trading.
submitted. Order submitted.
Off
Order
the coast of
submitted.
California, dozens of ships from Long Beach to San Francisco Bay carrying 20% of global consumption. They are just sitting there for days.
On-land storage keeps filling up with the latest read on Cushing on deck as oil tankers carrying enough crude to satisfy 20% of the world's demand now sit off California's coast with nowhere to go.
We're taking very aggressive but appropriate steps to help the industry and help this economy, if you will.
The White House looks at multiple ways to help support domestic oil companies, from loans to royalty exemptions to pressure on China to buy U.S. oil.
If the other consuming countries do not follow the footsteps of Australia, US, and the others, put oil in the reserves they have, we may
Order canceled. Order canceled. Order canceled.
Distressed debt in the U.S. energy sector jumping to $190 billion. That's up more than $11 billion in less than a week.
It's another $310 billion here and another $300 billion of loans. That's over $600 billion putting into small businesses, which are the backbone of the economy.
The White House and congressional leaders strike a deal for the new $484 billion pandemic relief plan, with funds for a tapped-out small business program and aid for testing in hospitals.
Now talk turns to the next round of economic stimulus, and as it relates to the energy sector, look for Republicans and Democrats to be pushing for some type of an assistance program in the next round of funding for the energy sector.
Treasury Secretary Steven Mnuchin says it is premature to comment on the cost of the next big stimulus and that infrastructure could be a big investment. The focus now turns to Europe with the EU leader virtual summit on Thursday.
All right, taking a look at where we are in the markets. It's still relatively risk-on here in the U.S. despite a bunch of mixed earnings that are coming out this morning. Euro-dollar pretty much going nowhere. Broadly speaking, it's a weaker dollar in the G10 space. You are seeing selling across the bond market a little bit here in the U.S. as yields inch their way higher, but really over in Europe now you have BTP's yields up there by about 16 basis points. You did have really strong demand though for Spanish bonds, yet yields are ticking higher there as well, so they can sell it. It's just what price. That's what the question is. Also, an earnings update for you. So Delta cuts 50% cut in its daily cash burn by the end of June. So they're trying to slim back production. Kimberly-Clark, AT&T, plus Quest all withdrawing their 2020 forecast. Evercore is going to cut some jobs, and Biogen is looking at completing an Alzheimer's drug and filing there in the U.S. in the third quarter. So lots of news flow coming out right now. So for more on earnings and the markets, joining me now is David Kostin, Goldman Sachs Chief U.S. Equity Strategist. David, always good to catch up with you. How do you look at earnings when these numbers come out? How do you disseminate the information?
Well, it's a good
Order
question.
canceled.
The first
Order
quarter
canceled.
results
Order
are
canceled.
really not very meaningful. All the conversations with portfolio managers have basically looked beyond the first quarter results and really focusing on the path for the rest of this year and 2021 in particular. And specifically, the first quarter results, the first part of the first quarter was generally okay for many companies. The second half obviously deteriorating rapidly. And the second quarter, which we're in right now, is going to be the worst quarter of economic activity for the year and probably also for the earnings. Earnings in the second quarter we are now will actually be a loss. Companies across the market will lose money. So the reason that portfolio managers are looking forward is really the question about solvency and liquidity are the two issues. So rather than focus on the actual backward-looking results for the first quarter, the SEC guidance that came out just before earnings season was very clear that companies were supposed to focus not just on the historical first quarter results, which of course are required to discuss or at least address, but more importantly, the SEC said they needed to address the current financial and operational position of the company. And I think that's why it's consistent with fund managers trying to understand where things are going. The way to think about this, Alex, is what fund managers are doing is they're looking through. Keep going. Question?
No, go ahead. Go ahead, finish up.
So what the fund managers are doing is they're looking out into next year. And the big debate is exactly the trajectory of the recovery or the rebound or the response into the balance of this year and 2021. So our baseline forecast is that earnings will be down by around 33% this year. Companies, earnings will be down by a third, and that's also going to match the cash spending is also going to be coming down by about a third. And I think the most interesting development takeaway from the first quarter earnings is how many companies are withdrawing their buyback plans or suspending that guidance, A, and then B, also their adjustments in dividends. Companies are suspending or cutting the dividends. More than 20 companies have already done so since the start of the year. I think that is reflective of the company's desire to maintain the liquidity and the solvency. And so as a portfolio manager, the absolute most dramatic gap in terms of outperformance and underperformance relates to balance sheet strength. The companies with the strongest balance sheets have outperformed dramatically. They're down around 6% year to date. So admittedly, they're down like pretty much everything else. But the weakest balance sheet stocks across all the sectors are down by almost 30%.
So I guess the question then becomes, what do you care about more, sort of future profit or solvency or central banks? And I say that because JP Morgan had a note out basically saying that the suppression of the risk-free rate and credit spreads by the Fed likely is going to have a bigger impact on equity valuation despite the temporary earnings loss. Is that something that you subscribe to?
Well, I would look at it differently. We look at a distribution of outcomes in any investment process. The extraordinary measures of the Federal Reserve and by Congress have cut off the left tail, if you want to use that nomenclature. They have lowered the likelihood of a, call it a second depression.
Order submitted. Order submitted.
And the Federal Reserve has done a number of very important steps in terms of backstopping the commercial paper program, in terms of supporting the IG market, investment-grade bond market,
Order canceled.
Into the
Order
municipal
canceled.
market. They've done a lot of things in Congress, of course, with the revenue replacement, on the extended unemployment benefits. All those things are critically important in reducing the left tail outcome. That's important. But it doesn't address necessarily the right tail, and I'm not suggesting that that's a requirement or an obligation of the policymakers. I'm just saying, as an investor, looking at the potential outcomes, it lowers the downside, but it doesn't necessarily speak to the upside. The upside, or the forward path, is really a function of corporates restarting their business.
Order submitted. Order
bending
submitted.
of the viral curve and how that's spreading medically, and also individual humans in terms of their willingness and the behavioral changes. And so when you look at the upside is relatively more limited from my perspective. You look perhaps 10% upside in the S&P 500 towards a 3,000 level at the end of the year. But tactically, it probably goes lower on the near term, and it's on the back of uncertainty and what happens in the path going forward. That's pretty unclear, and so it suggests that valuations are still likely to go lower.
Filled. Order submitted. Order submitted. Order canceled. Order canceled.
So I'm curious then to see how you look at companies' capital allocation in terms of CapEx, because the companies that do survive are going to have to rejigger their businesses in terms of how they're going to deal with the virus going forward. Buybacks now feels like they're non-existent. You mentioned earlier dividends getting cut. Where do companies allocate, and what do investors want them to do?
Well, it's an excellent question. You know, the first and most important thing is for companies to remain in business, remain solvent. So the reason for companies to cut
order filled, order submitted, order submitted.
So they'll maintain their maintenance capex, they'll cover depreciation, and they'll cover much of their research and development.
Order filled, order filled, order submitted, order submitted, order submitted. Order submitted. Order
so the
canceled.
Dividends are more suspect. It really depends on the business model of some of the companies. Not the business model, but the businesses in which they engage. Some are much more stable, and those companies have reiterated or, in fact, increased their dividends. Look at Johnson & Johnson, Procter & Gamble last week announcing 6% dividend increases. Each of those companies raising their dividends. So some companies are in the position to do that, and investors are appropriately embracing that. And we would be advocates of, companies or advocating, companies that are in a position to pay dividends to continue to do so. That's a differentiating component of a company. On the other hand, companies are withdrawing buybacks for many reasons. Part of it is remaining and retaining that flexibility and that liquidity. That's why the record amount of corporate bond issuance as companies are trying to shore up their liquidity. So the idea of what do investors want companies to do? They want them to remain in business. Number one, first order of business, and then where judiciously can they deploy capital? Probably you're likely to see, we're expecting a big drop in cash M&A, a drop in buybacks, a drop in dividends, and your CapEx will come down as well, particularly on some of the growth initiatives that can be deferred into the future.
David, it's so helpful to catch up with you. Really great way to kind of help us decipher earnings and sort of the outlook as we get them. David Kostin of Goldman Sachs joining us there. All right, coming up, you got the U.S. Energy Department's inventory report coming up later this morning. Will give us some further clues on the pressure on storage. What should the actual policy response be here in the U.S.? We'll talk to Jamie Webster of BCG Center for Energy Impact. He'll join us next. This is Bloomberg.
Order filled. Order submitted. Order submitted. Order filled. Order filled.
I think it may be a good idea that those countries who made announcement that they are going to cut production may well reduce their production as soon as possible without waiting 1st of May, and they may even consider further cuts to what they have announced.
That was Fatih Birol, the IEA Executive Director, speaking to Bloomberg earlier this morning. Joining me now for more on oil is Jamie Webster, BCG Center for Energy Impact, a Senior Director. Jamie, good to chat with you. We'll start with OPEC+. Let's pretend that we see a deeper, faster cut from OPEC+. Does any of that actually help?
As long as we get it really fast, we need it immediately. Obviously, the 9.7 million barrels a day cut, as clearly indicated by the market, is not sufficient, and our view is that we probably need to double that, given the demand is still down around 29 million barrels a day. That's what the number was for April, and there's no indication that it's actually going to improve once we get to May. You don't see really any countries quickly looking to come back to kind of a normal economic stance.
So I can understand why politically Saudi Arabia, Russia might not want to cut right away, et cetera, and they're a little bit more reserved. But U.S. companies, I mean, there has to be some serious pain happening at the wellhead. Why are we not seeing the flips switch off faster here in the U.S.?
So there's often a view that once you get below operating costs that these companies will immediately shut down. There's real issues with that in that there is concern about damaging the fields. There's the fact that their OPEX cost is actually lower than that. There's several reasons why they are a little bit more reticent to do this, which is why when you're dealing with a market like this,
order filled,
you've got demand
order
that
filled.
is not going to adjust no matter how low the price gets. You've got a supply response that is insufficient. And now we are looking like full storage. The last gasp of being able to balance this market is shutting in production. And there's a reason it is the last place. But it really does look like this is where the market is going to rationalize. You are going to start seeing some significant cuts voluntarily or involuntarily over the next month.
With your years of experience, and we've all never seen anything like this, what do you think the government would do and can do to alleviate pressure on U.S. oil companies? There are many different things out there, sort of tariffs on Saudi imports, pressure of China to buy U.S. oil, these companies
Order
accessing
submitted.
small business
Order
loans,
submitted.
new loans for these
Order
companies.
submitted.
What do you think?
So one, obviously, you're going to be seeing some substantial cuts in the employment that you see in the oil and gas companies. We saw this in 2014. You could certainly prop up these companies by some additional loans, but of course politically that is more difficult in our country. I think what's really needs to happen in this country is actually you're going to need a rationalization, which is that the shale industry has been getting by for several years with pretty easy money and a pretty supportive environment. I think longer term we're going to need to move to where we're going to need smaller, fewer companies that are able to operate at a much lower
order canceled.
Cost rate,
Order canceled.
and be
Order
able to
canceled.
produce at still
Order
a quite
submitted.
substantial
Order
level, but
submitted.
also a slower
Order
growth rate than
submitted.
we've seen over the last several years.
Yeah, Goldman Sachs had an interesting note out sort of touching on this, that we haven't seen the kind of consolidation in U.S. shale that we have seen, say, in deep water or oil sands or bigger oil companies over the last few years because of the technicalities of shale. It's, the way we drill, the fact that the wells can be closer together, and so you need land that's really united together to make it all work. And I just wondered if this is just going to delay the consolidation, like we're just not going to get it the way that we're expecting it, and that's just going to prolong this whole thing.
Yeah, so the
order
consolidation
filled. Order
of the industry
submitted.
was really expected
Order
to
submitted.
begin in kind of 2014, 2015 as the prices came down. And what we saw
Order canceled.
was that
Order
was not
canceled.
the case at all. And it is because when you are doing some sort of consolidation or you're buying assets, you're effectively making a bet on the future oil price. And so when that price is really uncertain, you don't see the sort of consolidation that you need to happen. We've done some analysis in the Center for Energy Impact where we've looked at when you go through these sorts of periods where you would expect lots of deals to happen, it doesn't happen. What ends up happening is actually you have a couple of transformative deals, and we haven't seen those yet. I would still expect those in the next month or next 12 months or so. But these smaller sort of deals that you would expect to consolidate the market do not happen. And I think it's even worse this time because these are moving from distressed assets to destroyed assets.
Mm-hmm. Right, and who's going to want to take on that kind of debt? So we have a question from a viewer who's asking about oil prices, and they've been trending, lower for years as the supply just continues to come online. At any point, do we see a comeback in oil prices? Do we see that supply gap, or do we just not really get there?
I think for now, I think that is always that possibility where this was also discussed in the last downturn, which was a potential that the lack of investment would actually create missing barrels, and that would bring the price quite high. We had a year and a half ago or so, we had prices as high as in the 80s. But in this sort of environment where you've got really, really low demand that may or may not come back to the fullest level that it was previous to this, and you've still got the ability to bring on production at quite low volumes, and we're going to have storage at levels that will take at least 3 years to roll off. If you see higher prices, it's very far down the track, and it is possible that we are not actually going to move back to those sort of prices ever. It's going to be much more difficult longer term to do that.
Hang on, that was a pretty interesting thing you just said. So you think it's going to take 3 years for us to work off the storage that we built up during this crisis?
So it took 2.5 years to work off the kind of quote-unquote overhang with the 2014 plus, and this was after OPEC then finally decided to step back in. This is actually a bigger chunk of stocks that are actually out there. So this is going to take 3 years plus to roll off, and that assumes that demand actually comes back to the levels that it was in, say, December of last year. The likelihood is that we're actually going to move down to levels that we had in maybe 2012, and there's a potential that our long-term demand growth path, which for the last 20 years has averaged around 1.2 million barrels a day, might actually be at a lower level because some of us will choose, to not work from home. To work from home. Fewer of us will choose to take airlines. There's a potential for a demand shift longer term. Still very early to call that, but that is a potential that is out there.
Does that leave an oil price in a world where we're like 20 to 30 rather than like 40 to 60?
I think 60 is in this sort of environment is a tough find to get. You might still pop up there here and there. But I think 40 and lower is likely, at least where you're looking at right now, where you're going to need to be able to operate at.
Jamie, really good to talk to you. Some really fascinating insights. Jamie Webster of BCG, thank you very much. All right, much more to come. This is Bloomberg.
Order canceled. Order canceled.
You're watching Bloomberg Daybreak. I'm Vivian Hurtado with your Bloomberg Business Flash. We begin with Baker Hughes. It says in the first quarter, equipment orders were down 36%. The oil field services provider calling the outlook uncertain. Why? The coronavirus outbreak. Last week, the company pre-announcing a $15 billion write-down for two of its biggest units. Now to AT&T, it joined the list of companies that have withdrawn their forecast for the full year. The telecom giant also saying in the first quarter it had an impact of about $600 million from the coronavirus. In the period, AT&T's revenue coming up short. Profit was in line, though, with expectations. And we end with Netflix. It's warning investors not to get too excited. The largest online paid TV network posting the strongest financial results in its history. It added a record 15.8 million subscribers. In the first Q, Netflix benefited from the coronavirus pandemic. Millions stuck at home signed up. Netflix expects the surge to come, though, at the expense of future growth. And that's your Bloomberg Business Flash. Alex.
Thanks so much, Viviana. So still on stocks getting a boost from this pandemic. So at this point, the U.S. government has handed out more than $7 billion in contracts to fight the virus. And there's some well-known companies on that list, but also some surprising ones. Let's take a look at them. One of them is Moderna. It's going to get more than $400 million to develop and test a vaccine that's more than its combined revenue over the past 3 years. And on top of the list is Dutch company Royal Philips getting about $661 million. Most of that, though, is for ventilators. All right, coming up, different assets don't agree on growth and credit risk in the market. We'll break it down with Stuart Kaiser of UBS Investment Management. He will be joining us next. Overall, in the market, you're still looking at a modestly risk-on rally here in the U.S. and U.S. equity futures. Maybe part of that is finally have some stabilization within the oil market. The Brent contract is now up by 2%, so in the green, up 42 cents. And the future out contracts like July, August, September, etc. here in the U.S. also flipping into positive territory. A different story when you look at the bond market, though, because you have a sell-off underway in the peripherals over in Europe. You have 15 basis points for Spain and Portuguese debt. Italian BTPs there, you're seeing it jump about 8 basis points. All questions as to how we're going to deal with the peripheral issue when it comes to the virus, how you pay for it, what you deal with. EU summit coming up tomorrow. This is Bloomberg.
Order submitted. 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 Order canceled. Order canceled. Order canceled.
Welcome to Bloomberg Daybreak. I'm Alex Steele. In the markets, you're getting some relief here as crude prices stabilize. So markets able to take on a little bit of risk on theme.
Order
U.S.
submitted.
futures are up on the day, as well as European equities. I did want to highlight, though, what's happening in Italy. So if you switch up the board, you can see that yields are moving higher by about 8 basis points. It's about 15 or 16 basis points higher when it comes to Spanish or Portuguese debt. Spain was able to sell a lot of debt. There was a lot of demand, but yet they still have to wind up paying to do that. That's putting a lot of pressure then on EU leaders as they meet tomorrow in a virtual summit to decide on how to progress for any kind of virus stimulus. The ECB also meeting today to discuss using junk debt as collateral. Moody's will be talking about Italy's sovereign debt rating later on in the week as well. So for more on the markets, joining me now is Stuart Kaiser, a UBS investment bank macro equity and derivatives strategist. So Stuart, I guess my question is, and I've been talking about this all week, is that you take a look at the S&P V-shaped recovery, the data nowhere even near a bottom. Is risk appropriately priced?
I think that's obviously the million-dollar question. Our view is that, volatility has probably peaked, but that we're a little less certain on whether equity markets have bottomed. And I think, ultimately what's going to happen is earnings uncertainty is going to have to decline pretty substantially. If you look at the standard deviation of earnings estimates for both the Russell 2000 and the S&P, those are either at or above the levels we saw back in 2009. So I think investors are still kind of grappling a little bit with, what sort of profitability should I expect? And given the degree of uncertainty around that profitability, how confident can I be buying equities, at these levels?
Yeah, and you really echo what Bank of America had a note out just on this, saying that market volatility markets are underpricing the risk of a secondary market shock, and that we're looking at something that resembles 2008 and that bear market rally.
Order
Is that
canceled.
What you see?
Order canceled.
It's hard to say exactly, where spot price is going to go. In terms of where volatility is, I don't know that equity volatility is really, I don't know if I'd say it's underpricing things at this point. I mean, if you look where implied volatility is out 6 or 8 months, it's still at about 30% for the S&P 500, for instance. And those are, exceptionally high levels of volatility to maintain, over a 6-month period. So, I think our view here is that policymakers have done a really good job of anchoring down the volatility in safe haven assets, and that started to kind of flow its way through to risk assets. And that's kind of bringing the VIX down and bringing the VIX curve down a little bit. But the market is still pricing, I would say, a fair amount of uncertainty, for what's going to happen over the next, call it 6+ months. Whether it's fair, obviously that'll ultimately, be determined by where the market goes. I think that, the biggest risk probably to the markets here is, you mentioned this idea of a V-shaped recovery. I think if this recovery is not a V and mobility restrictions are extended and the economy is operating well below capacity for an extended period of time, I think that's really the risk that the market probably hasn't fully priced in yet.
So then obviously one risk that we didn't price in 5 days ago was negative oil prices. Can you talk to me about oil volatility just in and of itself, and then also then how it then spreads or not to the rest of the market?
Oil volatility is basically off the charts. The oil VIX, I think, was at 400 yesterday, to put things in perspective. Wow. And how that's really flowing through to other assets from our perspective is, one, I think it's kept small cap volatility at a premium. Russell 2000 is much more sensitive to oil, credit, and even growth risks than other U.S. benchmarks. So I think you're seeing a bit of a premium there. Obviously, oil, the energy sector has very, very high implied volatility. Brazil, which is an emerging market that's highly levered to that, also has very high implied volatility. So you're definitely seeing assets that are more exposed to the price of oil carrying a volatility premium. That's probably been the case, for the past month. The last week, it's gotten, a little bit wacky, but generally speaking, the market, I don't know if the market's appropriately priced that because it's very hard to price something that's realizing 200% volatility. But certainly things that are closer to the epicenter of the oil issue are carrying large risk premiums, whereas things that are closer to the epicenter of policymaker buying have seen their volatility really, really get squeezed. So I think what you're seeing is kind of an accordion effect where you have some things with very, very high volatility and other places where that volatility, you could argue, is even being artificially dampened by policymakers.
But nonetheless, you still have to structure how to manage risk. And now that we can go negative, whether or not we stay there, you have to reframe your risk models for that. How do you do that?
Yeah, I mean, I think I've seen some headlines along those lines that risk managers have had to sort of, change their assumptions of what a stress scenario might look like. From an equity perspective, I think it's a little bit less of an issue because most companies hedge and focus on kind of longer dated futures as opposed to what's going on in the front month. So, a lot of oil companies are going to hedge 12 to 24 months out on the futures curve. And that part of the curve has obviously behaved a little more normally. The front end of the curve is showing a clear dislocation between supply, demand, and storage. And you've had some real sort of technical issues going on there. I think we've talked in the past that the energy sector and oil in general has been a really, really tough investment for years because of, structural supply-demand issues. And I think this really just kind of, brings that to light. But luckily, I think at least on the equity side, the equity energy sector is only about 3% of the S&P 500 right now. I think active managers have generally not been as aggressively involved in that space. So I think the equity guys, have, I don't want to say remained insulated, but been at least at like an arm's length, social distancing, kind of like distance from the oil stuff. But, if you're a cross-asset investor or you're investing in energy directly, yeah, I mean, I think I think you have to ask yourself for the time being, is this an investable space?
Clever. Can we still see equities rally when you have oil roll over, in that it winds up affecting the credit market, break-evens, inflation expectations? Can we do that?
I think you can. I mean, I think equities can perform okay with what's going on in the oil space. I mean, typically lower oil prices, the read-through to equities is that you have a supply-demand imbalance, and particularly demand shocks are what you're worried about, because that would suggest that the growth outlook that affects equities as well is kind of under pressure. So I think that growth element is what the markets are really struggling with pricing in general right now. And in the oil space, you have sort of a demand shock that's now being reinforced or multiplied by some technical supply, demand, and storage issues. So I think, the growth piece, which I think is common to both assets, is going to be a challenge for equity markets. But I think by and large, that's the line of demarcation right now. I think equity markets and cross-asset markets in general are sort of struggling with how do we price growth and credit risks, how long might they persist and how deep might they be. So I think that is a common challenge for both markets. And, can equities rally? I think they can, but I would also say that the rally we've gotten thus far has been a pretty safe rally. The market's rallied a lot, but it's been buying of, high quality, safe growth kind of stocks. And I think what we've heard from a lot of investors is we need to see that rally evolve into something that suggests investors are actually moving up the risk spectrum for us to have more confidence in that. And we haven't seen that yet. And I do think things that you've mentioned, credit market dislocations, oil market dislocations, are just going to make investors much, much, much more cautious about taking that sort of next step up the risk spectrum. Excuse me.
All right, Stuart, really, really great to catch up with you. Thank you so very much. Great to chat with you. Stuart Kaiser of UBS Investment Bank. We do want to give you an update now. It's making headlines outside the business world. Viviana Hurtado is here with First Word News. Viviana?
Alex, we begin with breaking news this morning from the White House. President Donald Trump telling the Navy, destroy any Iranian gunboats harassing U.S. ships at sea. He issued the warning in a tweet. Recently, there have been a number of incidents in the Persian Gulf. Now to the U.S. House, it could vote on the pandemic measure as early as tomorrow. The U.S. Senate passing a $484 billion relief package. It includes money for the Tapped Out program to aid small businesses. There's also money for coronavirus testing, and hospitals, they're swamped with COVID-19 patients. And we end on immigration, and President Donald Trump announcing he would halt for 2 months the issuance of green cards for permanent legal residency. The president, though, stopping short of a ban on temporary foreign workers, but he is hinting at the possibility of additional restrictions, and that could complicate planning for companies looking to rebound from the coronavirus. Global News, 24 hours a day on air. Now, quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Viviana Hurtado. This is Bloomberg. Alex.
Thanks so much, Viviana. And we've seen those protests actually in some parts of the U.S. calling for reopening of the economy. Now, the Fed looked at the grim economic trade-offs. On the one hand, you have younger workers start getting paid again, but if everyone goes back to work sooner, then older Americans are more likely to die from spreading the infection. Now, the U.S. has more coronavirus deaths than any other country, and researchers estimate there could have been 172,000 more if the U.S. had ended a shutdown in early April. Meanwhile, the St. Louis Fed says the closures may push U.S. unemployment above 30% in the second quarter. That's about 7 times the average rate over the past 5 years. All right, coming up, sustainable investing in today's environment. We're going to discuss how the pandemic may have changed strategies with Christian McCormick, Allianz Global Investors, a senior product and sustainability specialist. And remember, Bloomberg users, go ahead and check out any charts we use throughout the show. Just go right to GTV Go on your terminal. This is Bloomberg.
This is Bloomberg Daybreak. I'm Viviana Hurtado with your Bloomberg Business Flash. We begin with Delta Airlines. It's vowing to cut its daily cash burn in half by the end of June. The carrier hopes to be going through $50 million a day. This when the second quarter ends. Because of the collapse of travel demand, Delta cutting flying capacity 85% plus. It's parked 650 jets. More than a third of Delta's workforce is taking short-term leave without pay. Now to United Airlines, it's stepping up efforts to survive the collapse in travel demand. United has raised $1 billion by selling new shares. The price was at the high end of the marketed range. The government stepping in with $50 billion in grants and loans for the airline industry, but carriers are still trying to raise more cash. And we end with a warning from Heineken. The Dutch brewer saying the weaker emerging market currencies may add to the problems of lower beer consumption. The coronavirus pandemic ravaging the industry. Heineken says in March, beer volume fell 14%. In the first quarter, it dropped 2.1%. And Heineken expects the second quarter to be worse. I'm Viviana Hurtado, and that's your Bloomberg Business Flash. Alex.
Thanks so much, Viviana. All right, time now for Bottom Line. We're going to take a look at the sectors and companies that are worth watching this morning. It's Earth Day today, so we're going to focus on ESG investing. Joining me now is Christian McCormick, Allianz Global Investors, Senior Product and Sustainability Specialist. Christian, it's great to be able to chat with you because the trend a few months ago was all about towards ESG. Has that changed at all over the last 8 weeks as the virus has really taken hold and really wrecked a lot of investors' portfolios?
Good morning, Alex. Interestingly, if we take a look prior to the pandemic, as you mentioned, sustainable investing was already growing. And I think some of the more important factors beyond just performance was that we were seeing positive net inflows into sustainable related funds. And these are truly sustainable funds, not just, say, a fund that has a simple exclusion of tobacco stocks or maybe one of the other quote unquote sin industries, but into strategies that truly incorporate a large number of ESG ratings into how they implement their investment process. So in 2019, it had about 20 billion of positive inflows, and that was versus about 42 billion of outflows that we saw in traditional equity funds. And this continued into the first quarter. So we've seen an annualized rate of about 44 billion of net inflows into sustainable related strategies versus 82 billion of net outflows of traditional equity funds. And also performance has been very strong. So as the performance numbers have started to come in for the first quarter, both with our own experience and kind of our flagship strategies, some of the passive proxies that do incorporate ESG, and of course a lot of our active manager peers in the sustainable space from a medium perspective or average manager perspective, we're seeing fairly strong outperformance across the board. So it's been a good environment for sustainable investing overall.
Well, I was going to say, do you expect these kind of retail flows or interest to continue, which would lead me to performance? What strategies have done well if it's not as simple as just like excluding, say, tobacco stocks and coal stocks?
So what we've observed is really two fairly interesting themes. So I think a big positive coming out of the pandemic, if there is a positive, is that companies on average are doing right by their employees. And they seem to really be attempting to balance the kind of employee welfare, employee health, with just running the business. And something that we're trying to be very cautious of as a sustainable manager, and I think other asset managers are doing the same, is not trying to micromanage an executive board or management team when they're looking at very realistic probability that maybe they don't exist in 6 months, right? They have significant liquidity issues. They have significant ongoing concern issues, business operations issues. And so we certainly don't want to be micromanaging them on, okay, well, what are your environmental policies? What is your exact corporate governance structure? So we've kind of stepped back from that. But I think one of the two interesting themes that are emerging, or two of the interesting themes, is that companies that performed well and were rated better on more of an aggregate ESG basis as opposed to a very specific ESG measure, such as just doing well by the environment or just having a good corporate governance structure. These are the companies that have done well during this pandemic period, during this downdraft in the equity markets. So that's given some credence to this notion that, look, if the companies are well positioned in the first place, that when these tail risk events happen, they're going to be much better positioned. And we've seen that come through in performance. I think the second reason, and this is a more interesting one, is that the pandemic is a tail risk type event, and perhaps that there are lessons that we can apply post-mortem once things settle down a bit from a modeling and assessing tail risk perspective. So given this is Earth Day, kind of two very interesting things we're looking at is the significant drop that we've seen in oil demand. Now, it's been over the very short term, and it's really not related to sustainable investing per se, but one aspect of climate change is the negative demand effect shifting to a carbon neutral type economy is going to have on stranded assets. So looking at the effect of this drop in demand over a very shorter time period, are there modeling lessons that we can learn to apply to, say, stranded assets over a very long time period in assessing the negative effect that will have on their valuation? And then the second one is the disruption of supply chain. So everyone's supply chain has been disrupted, right, by the pandemic, and it's related to the pandemic. But are there lessons we can learn for specific companies or specific industries, that maybe relate to, okay, if the frequency and magnitude of, say, extreme weather events is increasing, and that's going to disrupt the supply chain, what lessons can we learn of how maybe better a company can manage going forward its supply chain that's related to that, given how it did during this pandemic period?
Such an interesting point. And this also brings up sort of shareholders versus stakeholders conversation, meaning that if you're a company, you're saying, I'm not going to lay off anybody. I'm providing all this health care and sick care to workers because of the virus. Here are all the steps I'm taking. But that may come at the expense of buybacks or dividends or stronger earnings. Do people want that? Or do they just say they want that, but in actuality, they still want the earnings and the buybacks and the dividends?
It's an excellent question, and I think the one aspect of it that doesn't get discussed enough is this notion of time frame. So without question, the way that we manage our strategies, and I think that most sustainable investment strategy asset managers would have the same approach, is this is more of a medium or a long-term value proposition. So, companies just in general, so if we take a step back, they've shifted to having, I think, a greater amount of intangible types of assets components, intellectual capital components. There's greater reputational risk because of social media. And so when you look at that, say cybersecurity, of course, and data protection, ESG factors are better equipped to evaluate those things. But what ESG is not some sort of short-term fraud detector. It's not really a good tool for assessing if I invest today, ESG will tell me what the good stock is going to be over the next 6 months. So if you keep that medium to long-term value proposition, then what you see is that better sustainability practices and overall incorporation of ESG factors by company management lead to greater brand loyalty, lower kind of employee turnover, much better alignment of interests throughout, both with customers and employees and even the supply chain. Productivity is improved. And
order canceled. Order canceled. Order canceled.
A false choice between, say, shareholder versus stakeholder is that if stakeholders in aggregate are winning over the medium and long term, that means that shareholders are probably going to win over the medium and long term. Now, it's a fair question that if you take away something like share buybacks, that could be more of a short-term tool that, A, you're increasing demand in your stock, and also it allows you to manipulate, the EPS number a little bit more. And so over the short term, maybe the stock rises because of an increase in buybacks. But we think, again, it's a medium and long-term proposition. And if you keep that in mind, that the interests are perfectly aligned between the stakeholders, and the shareholders.
Really interesting. It was such a pleasure to talk with you on it. It's a topic I've been thinking about quite a lot. Christian McCormick of Allianz Global Investors, thank you very much. I do want to announce that Netflix now is proposing a $1 billion offering of senior notes. So get in the debt market, raising some money after earnings came out. They had killer subscriber growth in the first quarter, but the stock is off 2% in pre-market as the expectations now for the second quarter in terms of subscriber growth aren't really as awesome as the stock was pricing in. So looking to raise about $1 billion of senior notes. All right, coming up on the program, plunging oil is part of a deflationary receding tide that we're also now seeing in bond yields. That's going to be our chat in today's Technically Speaking. This is Bloomberg.
Order canceled. Order canceled. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order canceled.
time for Technically Speaking. Joining me now, Mike McGlone, Bloomberg Intelligence commodity strategist, joins me now. Mike, good to chat with you. What are you watching today?
Hello, Alex. I think we should focus on the macroeconomic picture of demand destruction. So what I'm showing on the first chart is WTI crude oil weekly chart, so it filters out some of the negativity. Brent crude catching up to WTI around 20, and bond yields. And if you hear about all this supply-demand issues in crude oil, it's really it's really a tree in the forest of deflationary trends. They're all heading lower. It's a good indication. We're probably going to be lower for longer at a lower plateau for a while.
Well, and then I wonder what the beneficiary is, and this must have been a fun interview for you to hear, but I spoke to Francisco Blanch in the last hour, Bank of America. He sees $3,000 gold within 18 months would be really monetize all the federal deficits and what the central bank is doing. What does that mean then for the equity market?
Well, exactly. Francisco's a good friend. It's good to hear him coming on board on gold, and he's been bullish for a while. But it's the same thing. It's not so good for equity. So my next chart, so this is the 1-year change in the main investor ETF. So we have GLD up 32%. That makes sense. SPY down 7%. An environment like this, it seems a little bit expensive. And USO, which is the #1 traded crude oil ETF, down 80%. By the way, it's down just as much as the spot price, despite the fact it has to roll. So this is just what's happening. Stock market's more likely to follow crude oil, and it's diverging with gold.
Really interesting. All right, Mike, really great to catch up with you. Mike McGlone of Bloomberg Intelligence. And that does it for me here at Bloomberg Daybreak Americas. Coming up on the Open with John Farrow, Wacom Felds, PIMCO Global Economic Advisor, will be joining him. In the market, you're still looking at a relatively risk-on day within the equity market. S&P futures are still up by about 48 points. Crude finding some kind of stability here, yet yields getting a boost as all bonds come under pressure, particularly those in the peripheral countries like Spain, like Portugal, over in Europe. This is Bloomberg. Happy Wednesday, guys.
Order canceled. Order canceled. Order submitted. Order submitted. Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order canceled.
From New York City for our audience worldwide, good morning. Good morning. The countdown to the open starting right now. 30 minutes away from the opening bell in New York City. Your price action set up as follows. After the biggest daily loss in 3 weeks on the S&P 500, we have a little bit of a bounce. The S&P up by 49 points, positive by 1.8%. A mild risk-on morning with the bond market lower and Treasury yields higher. Yields positive by 3 basis points to 0.6%. And in the commodity market, where the attention has been through this week, in fact, through most of this year, Brent crude with a little bounce too, up 7% to $20.70. And WTI getting back to $13.43. So that's your price action. Let's get to the top story, shall we? We are ready to pass another $484 billion of aid. It's gone through the Senate. It should go through the House tomorrow. A ton of fiscal stimulus, fiscal aid over the last month alone. Just a month ago, we were talking about a $2 trillion bill, an extra $484 billion, and seemingly a whole lot more still to come. This Treasury market is sucking it all up. Yesterday, there was a question, though. For how much longer will Treasuries offer you those risk-mitigating characteristics in a down market? The S&P 500 was down about 3%. The oil market was cratering, and yet we only saw a move of about 4 basis points on Treasuries. And that's where I want to start today's program. We do that with a fantastic guest. Joachim Fowles of PIMCO joins us now on the phone. Joachim, help me out with that dilemma right now. We have all this supply coming through on the one side, and then there's still tension on the other side, and we end up with this really range-bound Treasury market. Just give me a little bit of colour on how you think that dynamic is going to evolve.
Order cancelled.
All right, Jonathan, I hope you can hear me. Good morning.
I can hear you now, sir.
Can you hear me? Yeah, all right.
Order submitted.
Sorry.
Order submitted.
Yeah, all
Order
right.
submitted.
So Treasury yields this low. What's behind this? Well, I think there are 2 things behind this. First of all, we have a very deep recession, and with a very big hole in demand. Secondly, we have a Fed that is buying very large amounts of Treasury bonds and will likely continue to do this. And we have an outlook, which is very important for the Treasury market. We have an outlook of an even larger private sector saving glut
Order
even
filled.
once the economy
Order
recovers,
submitted.
because
Order
households
submitted.
will likely want to bolster their precautionary savings. Corporates will probably want to delever once this is over and want to hold more cash on their balance sheets. So I think the outlook is, and
Order
that's what's
canceled.
priced into
Order
Treasuries,
canceled.
is that yields are likely to stay very low for a very long time.
Joachim, yields staying low for a whole lot longer is one thing. Treasuries providing you with a buffer in a down market is another. What are your thoughts on that? As you speak to people at PIMCO at the moment, what's the argument that you're making to keep Treasuries in a diversified portfolio? Do you still think they provide you with the risk mitigating characteristics that they provided through the first quarter of this year? Down at 50 basis points, can they still perform that way?
Well, I think Treasuries still can mitigate risks in otherwise risky portfolios, so there is still room for yields to go lower. Obviously, that room is much more limited now than it has been historically. But, yields can go to zero. They can possibly go somewhat negative, even if the Fed does not push rates into negative territory. So Treasuries still have that risk mitigating characteristic. But again, we have to acknowledge that we are at much lower levels, so the room for rally in Treasuries is much more limited. What this means is that investors will likely have to reduce the overall risk in their portfolio. So one implication of this is if you cannot hedge those risks in the same way you could in the past by holding Treasuries, well, then you have to reduce the overall risk in your portfolio. And I think this is what we're likely to see over the next few months and even years to come.
I want to talk to you about some of the risks that we're realizing currently, Joachim. We've had a huge demand collapse, quite clearly. We're all experiencing that. We see it on the screens on any given day. We've also got a big price shock now in the oil market. That's set to reverberate globally. What are the points of tension that you want to focus on?
Yeah, so I think the way I look at this is that we have three epic gluts here. We have a saving glut, we have a money glut, and we have an oil glut. And that oil glut, the excess supply that is still in the market, that has been pushing oil prices to such low levels. Now, the near-term impact of these lower oil prices is probably net negative for the economy because it increases the pressure on the energy sector. So there are many highly indebted companies in that sector. The energy sector was already under pressure for some time. This is going to intensify in the near term. Also, what this is doing is it's pushing inflation lower. So I think the risk of near-term deflation has increased. So again, it's a near-term net negative. We don't think this oil glut will last for very long because as soon as the economy starts to pick up and you get more of the supply restrictions that companies are putting in place now, shutting in oil, we think we'll see some recovery in oil prices. But the longer-term outlook is that the other two gluts, the saving glut and the money glut, will stay in place for a very long time. The implications of the saving glut is that, the flip side of the coin is that consumer spending is likely to remain very subdued even when the economy picks up. So I think we're looking at a period of very subdued growth over the next several years.
Joachim, that's a really tough backdrop for demand. And if you think about the policy response so far, the policy response, the objective is to help companies get to the other side. It's to maintain capacity. And as you think about that, as we come out the other side, if policy has been successful and we've maintained capacity, yet demand is still going to be soft, that's a low inflation world, isn't it, Joachim? Is that the world that you're anticipating?
Order filled.
I think inflation will remain low for quite some time. We've had more demand destruction than we've had supply destruction, so the near and medium-term outlook for inflation is really low. Longer term, I think it really depends on how active fiscal policy will be once we're back at full employment. Now, again, we won't be back at full employment for quite some time. It'll probably take several years to come. But once we get there, if fiscal policy then still stays active and monetary policy is willing to monetize that, then I think we could see some pickup in inflation. And what's always happened after periods of significant increases in debt is that eventually central banks were instrumentalized to help deal with the debt. So I think there is at least a credible scenario, a long-term scenario, where inflation picks up, central banks allow it to happen, and that's then the way to deal with the debt.
One thing I wanted to wrap things up on, Joachim, if we can, is just touch on politics. Today, the president will sign an executive order on green cards, a 60-day ban to stop people from applying and to try and protect American citizens from competition from abroad. I'm not here to offer an opinion on that particular move. What I am here to ask you, though, Joachim, is try and understand whether you anticipate this getting a whole lot more intensified over the coming months. If you have a situation where the economy is getting hit around in the way that it has done in the last couple of months, ahead of an election in November of this year, do you anticipate the protectionism getting a whole lot more intense in the months ahead?
Yes, Jonathan. I think one of the victims of this crisis, one of the longer-term victims of this crisis will be globalization in many respects. I mean, this is true in the corporate sector where companies will try to reduce the complexity of their global supply chains. But I think you will also see continued restrictions to travel. And longer term, I think you'll also see more restrictions to immigration because the virus and its spreading gives politicians, gives populist governments a perfect excuse to draw up borders. So I think this is going to be one of the longer-term consequences of this crisis.
Joachim Fowles of PIMCO. It'll be a conversation, no doubt, that you and I will pick up and run with in the weeks and months ahead. Joachim, always great to hear from you, sir. I hope you and yours are doing really well. Up next on the programme, we'll bring the conversation to the oil market. It's been the epicentre of conversations all week, and for good reason. We'll be catching up with Jan Stewart of Cornerstone Macro. We'll do that next with Futures Positive. This is Bloomberg.
may be a good idea that those countries who made announcement that they are going to cut production may well reduce their production as soon as possible without waiting 1st of May, and they may even consider further cuts. In the absence of the right policies until June, we may have difficult weeks and months to come.
Fatty B-roll there, the IEA Executive Director, weighing in on the situation in the oil market. We've had some fantastic notes come in from the south side over the last 24 hours on this huge move in crude. This came from Goldman earlier this week. It says the following: production will soon need to fall sizably to bring the market into balance, finally setting the stage for higher prices once demand gradually recovers. And they finish with this: this inflection will play out in a matter of weeks, not months. That from Goldman in the last couple of days. Let's pick up on that subject, shall we, with Jan Stewart of Cornerstone Macro. Jan, great to have you with us on the programme. We can rebalance and we can do it quickly. Lower prices today can lead to higher prices in the future. It's something we've heard so many times, Jan. Is that what you anticipate this time around?
Nah, it's the kind of stuff, right? It's the kind of stuff that Goldman's and others are able to entice people into the US oil with. And it's a bit of a sucker bet, isn't it? How fast is demand going to come back? How much production needs to be shut in? When do you reach tank tops? All of those questions. Two of them have been answered. We're at tank tops and production needs to fall a lot and a lot more. Fatty B-roll is, as per usual, going behind the curve a little bit. And if demand is very slow in picking up and is quite low, then pray, why would there be a recovery in oil prices this year or next year? So we're more bearish, what I'm trying to say.
Jan, I'm told, just to jump in, that apparently this is going clear to air, but unfortunately on my side, I can hardly hear a thing. And since I can hardly hear a thing, it's hard to anticipate what you're saying and then ask a follow-up question. So Jan, forgive me, I'm going to have to cut the interview really short, and perhaps my team could reach out to you. We can get you back on the programme soon. That's Jan Stewart there of Cornerstone Macro, weighing in on the oil market. A huge move in crude. Hardly anyone wants oil right now. There's very little demand for it, and even if you do want it, there are very few places to store it, which is why we've seen such a huge move lower in oil. The idea for many people is that as oil crashes, people will have to shut in production and just adjust to the lower prices. Low prices today, higher prices in the future. At least that's the theory. Let's see how this plays out. The conversation will continue. We'll have a chat about what the oil market means for credit and fixed income. We'll do that with Kevin Giddis next on this programme from New York this morning. Good morning and thank you for your patience. This is Bloomberg.
Order canceled. Order canceled. Order submitted. Order submitted.
13 minutes away from the opening bell in New York City. Let's get you up to speed on some of the price action, shall we? Equity futures nicely positive, up 49 points on the S&P 500, a bounce back from yesterday's session. A similar move in the bond market on a closing basis yesterday, really close to record lows on a 10-year maturity in the Treasury market. Yields inflecting just a little bit higher today, reflecting that risk-on mood. Relative risk on mood, I should emphasize. The outperformance in the FX market in G10 at least coming from the Aussie dollar and pound sterling. In the commodity market, huge focus there, of course, for good reason. Crude, a bounce back there as well. We should call it a bounce, even though the move on a June contract is 20%, $13.83. So that's your price action. This is what we're going to do. We'll reset, get you some morning calls, and then get you another voice on the big moves we've seen in the market over the last week or so. So let's start with your morning calls. Some of the views from Wall Street this morning. We begin with Bank of America downgrading Tesla to underperform with a $485 price target. The analysts seeing several hurdles in the current environment, including production headwinds and rising competition. Your second call coming from Oppenheimer, upgrading Snap to outperform with a $1 billion price target, $18 price target rather, forgive me, $18 price target. The analyst writing that the company is executing on all metrics following quarterly results. And finally, Stifel downgrading Netflix to a hold with a $460 price target. The analyst warning that this could be as good as it gets as the US begins lifting some of the country's lockdowns. Oppenheimer, $18 price target, not a $1 billion price target. Let's get you over to Michael McKee, shall we, to set the scene down in Washington, D.C. Mike, great to catch up with you as always, sir. We have a bill. It's passed the Senate. It heads to the House. I've been trying to ask this question over the last 24 hours. As they top up the Paycheck Protection Program, have they changed the rules? Have they changed the rules, Mike?
They have changed the rules somewhat. New definitions, which will come from the Treasury Department, not in the bill, as to who is eligible for what kind of loans. The idea is that they would steer more loans to smaller companies. There is a set aside for smaller banks to loan to customers, and a lot of the small companies, restaurants, that sort of thing out in smaller states will be dealing with those small banks, and the hope is that this will get them to the point where we're sending more money to these private small companies instead of publicly listed companies who are taking down money they may or may not need.
Yeah, the disappointing thing for me as well, Mike, over the last couple of weeks is just the conversation around this. There are facilities to help big business. We should help big business. They're really large employers. We are helping them in the debt markets. The Federal Reserve is doing a whole load of things to make sure that people can still tap a functioning debt market. The last thing we want, though, is for small business to compete with big business for the same pool of funds. One set of businesses will have an army of accountants and bankers ready to do the paperwork and get the access. The other set, the smaller businesses without that army, just aren't going to get access to the funds. The other complaint, Mike, that we've heard continually over the last few weeks is that these small businesses without the big relationships with the banks are at the back of the line. Have we adjusted that somewhat as well, Mike? Can we adjust that issue, address it just a little bit?
Well, I think you're going to get guidance from Treasury to the banks to not just favor their own customers. Part of the problem was this facility was stood up so quickly that nobody thought through all of the implications. The banks have to comply with Treasury Department rules called Know Your Customer. They've got to vet the people who are getting the loans to make sure they don't violate anti-money laundering laws and things like that. So naturally, their instinct was to take people that they already knew to get the money out the door quickly. So they're trying to relax those rules a little bit and help out. There was also a phrase in the original bill that was supposed to limit loans to companies with less than 500 employees, and the phrase was in any one location, which enabled people like Potbelly's or Ruth's Chris Steakhouse to get money because their individual stores only had less than 500 people. Maybe at a Potbelly you got 15 or 20. And so that was sort of a loophole that these people went through, arguing that these people still need money too. They still need their paychecks protected. So they're trying to work through that and get it to the people who are really small.
Mike, looking ahead, we'll be focused on the data tomorrow. The PMIs coming out of Europe, the preliminary PMIs for the month of April. We also get a read on the United States as well tomorrow too. And then this time tomorrow, we have to go through another set of ugly jobless claims. Mike, what are you focused on? It's pretty clear what the trend is. What are the data points that you're lasering in on in the next 24 hours?
Well, you probably want to look at the forward-looking indicators, which would be new orders. There aren't going to really be any since nobody knows how long this is going to last. We know that the numbers are going to be truly, truly ugly. The question in the U.S. is, do the jobless claims start to level off at all? Slightly lower. We're still going to have millions because of backlogs. And then we switch our focus from the initial claims to continuing claims. As that number continues to rise, it's reported with a week's delay. We watch that to see when those numbers start to go down, an indication that the country is still getting back to work. It's going to be a month or so until that's even possible, but that's where you're going to start to focus going forward. The PMIs are probably something you're just going to throw out unless there's some real surprise. Markets know they're going to be ugly, and there shouldn't be a whole lot of trade on that.
Mike McKee on the latest down in DC and the data for the day ahead. I want to get you set up for the market open with Netflix well and truly in focus. I'm pleased to say that joining us on the phone is Nat Schindler of Bank of America. Nat, fantastic to catch up with you. Help me understand how Netflix crushes estimates in the way that they did, and then the stock completely gives up the gains. What's the reason, Nat?
I think this is one of the clearest cases of sell the news I've seen in a long time. Netflix was up 34% year to date as of yesterday. It is clearly one of the real positive performers in this unprecedented environment. And as it goes down today, the market is basically asking, what are you going to do for me tomorrow?
And then the stock rolled over quite clearly. So now help me understand what you're looking for tomorrow and how sticky the new subs will actually be as this economy reopens.
Well, so that's Netflix was very clear, and I think everybody has to be very questioning about how well these new subscribers will stay on the system. I suspect they will stay for a while. I also suspect that we will not be in a fully open environment for quite some time. So other entertainment options like movie theaters are likely not to be drawing people away from entertainment at home anytime soon. So Netflix probably can keep these gains and build from them. And they're gaining on this in a separate way because of content. Is movie theaters lose their theatrical windows because of theaters being closed and likely staying so. Netflix can pick up that content and fill in any gaps in their content. So the stay-at-home entertainment trend should probably build from here and not end with COVID-19.
Nat Schindler of Bank of America. Nat, fantastic to catch up with you ahead of the open to get a feel on Netflix. This came from Netflix in a note to investors saying the following: we're seeing temporarily higher viewing and increased membership growth. We expect viewing to decline and membership growth to decelerate as home confinement ends. Many people in this market, to Nat's point, getting well ahead of this story. Netflix became the defensive name in a moment where many people were stuck at home with very little to do, and that stock has ran up big time. We've seen all-time highs on Netflix, seen it on Amazon as well. What's lagged has been the likes of Google and Facebook really painting a picture of an ugly ad market, not just through this moment, but in the months and potentially year ahead as some of the companies come out with a lot more debt after this shutdown and a lot less money to spend. We'll talk about that another time. Let's get you set up ahead of the market open, shall we? The opening bell around about 4 minutes away. The state of play as follows in the United States of America. Equity futures in New York with a bounce after yesterday's big losses on the S&P 500. The biggest one-day loss on the S&P in around about 3 weeks. We're positive this morning, up 48 points on the S&P 500. We are positive by around about 1.8%. In just a moment, I'm looking forward to bringing you the views from Citigroup. We'll do that next on this program from New York. This is Bloomberg. seconds away from the opening bell in New York City. Here's your equity market up 1.75% on the S&P 500. We bounce higher after yesterday's losses. In the bond market, yields bouncing off what was almost an all-time low on a closing basis in yesterday's session on a 10-year Treasury. Yields higher by 3 basis points. Let's call it 0.6%. In foreign exchange, the state of play in G10 for you, shaping up as follows. The euro, marginally positive. The Aussie dollar, much more so. And in the commodity market, reflecting the bounce you see elsewhere, perhaps driving it, crude settling down, firming up, Brent up to $21, WTI with a 14 handle. On days like today, on weeks like the one we've had, 14 is a high crude price given what we saw just a couple of days ago. Weighing in on all of this, we can get to the market desk and get you some movers. Here is Abigail Doolittle.
Good morning to you, John, and lots of movers on this Wednesday. Starting out with those related to COVID-19, lots of stocks moving to the upside, starting out with Pfizer and a German company called BioNTech. They received joint approval for a human trial vaccine for COVID-19 that will test 4 separate forms of the vaccine. And this is the first human test approved by Germany. You see that German company really popping sharply higher. That's the ADR. We have Moderna also trading higher. They've been approved for more funding from the U.S. And Novavax popping on these tailwinds. Interestingly, though, Andrew Left of Citron is saying that this is a $15 stock, but not today. It is up by about 6%. Then moving to some earnings movers, AT&T, they put up a mixed quarter, but take a look at that, popping by about 3%. They withdrew 2020 guidance as well, but what investors like there, John, is the fact that they are saying they can cover their 2020 debt costs, so that stock is, again, reacting well to that. Biogen, not so much, down 7.5%. They beat, but there are delays on their Alzheimer's drug trial that investors are not liking. Snap, the big winner this morning, up 33%. Now, there is a 10% bearish short interest, so there could be some of a bearish pop there. Short squeeze, but they saw strong ad revenue trends, so that could be a piece of the soaring, the fact that Snap is snoring. And then soaring, not snoring, excuse me. And then finally, the big one this morning, Netflix, all over the map, but right now down almost by 3%. They, of course, put up a big quarter, but it wasn't enough. As you've been pointing out, John, this stock priced to perfection, valuation, even though folks don't like to take a look at valuation on it, PE very high, up 34% into today on a year-to-date basis. Plus, as the lockdown does conceivably ease, even the company admitting that could eat into their business. So those shares are down, but still big, up in a big way on the year, John.
Abigail, thank you. A massive run-up through 2020 for that name. Who would have thought Netflix would become a defensive name in the way that it has done in the last month or so? We're about 2.5 minutes into the session this Wednesday morning. A session shaping up as follows. We advanced by 1.75% on the S&P 500. On the Nasdaq, up by 1.9%. Are things looking good? Citigroup question now. Here's a quote for you. Even with the recent rebound, this is still the most bearish bear market that we have seen at this stage of a global recession. It's too early to call the all clear in our view. Robert Buckland of Citigroup joins us right now. Robert, let's put some meat on those bones. Why?
Yeah, I think, John, it's because the markets have just went down so sharply at the beginning of this sell-off. I mean, we were down 34% globally. If you go back and look at these previous kind of recession-driven, and I think we're going to have a global recession, there's no doubt about that, but if you look at these previous recession-driven bear markets, it normally takes us 12 months to do that. So the very fact that the markets have bounced back doesn't mean that we're showing that much of a different return profile to what we've seen in the past.
You've said over the last couple of days there is this central banks, and on the offer is this collapse in global EPS. Given the nature of the stimulus response, that I think we could probably say, Robert, is unprecedented. Can you make a decision at this point that there's one winner over the other?
Yeah, I mean, I think that ultimately we may end up with an outcome that keeps neither of those camps happy, right? So the don't fight the Fed camp, they're banging, they're going to talk about the 5.5 trillion, and the oh my God, profits are a disaster camp are going to talk about the minus 50. Maybe the minus 50% on EPS guys think that share prices should halve. That's the S&P at 1,700. The don't fight the Fed camp will probably say the S&P shouldn't be down much from where we were earlier in the year. The actual outcome might be somewhere in between, and in a strange way, that will keep neither camp happy. That's often how markets work. The price we end up at is where the bid offer comes together, but it doesn't actually tell you much about where things are going to go in the future.
One thing that doesn't get much discussion at the moment is the retest of the low, largely because we've had a massive rally and a lot of people have capitulated on that view. Robert, I'm always trying to understand people's process, why they think we will or won't do one thing or another. And a lot of people would tell me on a program like this that we don't have the excesses that we had in 2000 and 2007, so the drawdown should be shallower. They'll also say to me that to retest the low, we'll need another liquidation, sell everything phase like we had in the middle of March, and we're unlikely to repeat that too. What do you think of those two comments alone? Do you think that's sufficient to say there are reasons we won't retest?
Order submitted. Order submitted.
Yeah, I mean, the first point is a valid one. You know, all the indicators we show, and we were looking at earlier in the year, were telling us that it wasn't as bullish a bull market as we saw back in 2000 or 2007. So we don't need to rip so much frothy, bullish money out of the equity market.
Order submitted.
I think that's a fair point. On your second point, you know, do we effectively see a collapse in earnings coming through here? I think the collapse in earnings coming through here is just as great, if not greater, than we saw in 2008, 9, 10, where earnings were down 60%, but spread over 2 years. We're talking about earnings being down 50%, spread over 6 to 9 months. So I think that is potentially likely. I think the best way to describe it to your viewers is that for a couple of weeks, the giant bid, as you mentioned, the $5.5 trillion, will win, and we'll all decide that things are over, and then we'll come back and look at the giant offer, which is profits down 50, and we're not out of the woods on this one yet. And I think that we'll have a period now, potentially in the next month or two, where the focus will come back on just how devastating this is for the global corporate sector, and it is. That has to be the right word, devastating.
Well, if it's going to be devastating, let's talk about positioning. The sectors you want to be in and the sectors you really don't want to be in right now. And the nuance is that actually the sectors you want to be in, arguably, are the ones that have ran up already, and the sectors you want to steer clear of are the ones that have carried on trading lower. So, Robert, with that, what do you do?
I think, as you know, a lot of the debate before we ran into this was growth stocks against value stocks. I don't know, tech and healthcare and so on, versus autos and banks and oils, the cheap stocks. I think that at a time of recession, the game changes subtly, not completely, it doesn't reverse, but now it's about defensives against cyclicals. And the go-to for defensive sectors are telecoms, healthcare, the utilities sector, and consumer staples. Those are the four that will offer the most protection to investors who are worried about the minus 50% EPS number. Those are the four I'd go to.
On the cyclical side, what would you do?
Yeah, on the cyclical side, I think my favorite cyclical, but I'm afraid it's still a cyclical, is tech. Tech sector has done pretty well in this. It's held up relatively well. You just mentioned the point that Netflix is a defensive. Now, we've been overweight tech for years. I cut tech from an overweight to a neutral recently. And I think I still like tech relative to the other cyclicals, but it is a cyclical. It's discretionary spend to buy electronic goods. It's discretionary spend for companies to put data on the cloud. It's a little bit like modern CapEx. So I do think there's a discretionary element in tech which is vulnerable.
Just a final word on energy, if we can. As you know, Robert, as many people watching this program know, when things are good, that's the worst time to invest in basic resources, because they will only ever burn a hole in whatever cash you offer them to go and dig a new hole and extract more resources, whether it's energy, oil, whether it's basic resources like metals, copper, iron ore, etc. When things are bad, that's when these companies become really quite disciplined. And I would argue that it's the point of maximum pain where the opportunity comes around in this sector. For energy right now, have we reached the point of max pain, at least in your view, Robert?
Yeah, that's a good point. I mean, to be honest, both mining and oil companies have been adopting a more disciplined capex position in the last 2 or 3 years. Their real mistakes were made earlier in this cycle where they overinvested. So I think they were already coming into this with increased capital discipline. Of course, we've had an unprecedented collapse in demand. But the point I would make, let's say, about the oil price is that I'm more confident. People often ask me with cyclicals about V-shaped versus L-shaped. I'm more confident from a very low base that the oil price can be V-shaped. It might not get back to where we started or where we were at the end of last year, but it will climb back to some extent because there will be a bit of supply-side discipline trying to stabilize the price as we look out from here. So I have sympathy with your view. I'm actually more worried about the L-shaped things, and I think the most challenging L-shaped thing out there is going to be interest rates. I think interest rates are going to go down and stay down. So of the two really battered cyclicals, big cyclical sectors, financials and energy, I'm more bullish on energy than on financials right now.
Interesting take. A conversation for another time. Robert, great to catch up with you. Robert Buckland there of Citigroup. Up next on this programme, Kevin Giddis of Raymond James weighing in on the bond market from New York this morning. Good morning. This is Bloomberg. Thirteen minutes into the session here in New York City, the session shaping up as follows. Your S&P 500 advancing almost 2%. On the Nasdaq, we are higher by 2.11%. That is the index level price action. Let's lift the lid and get you some sector price action. Here is Bloomberg's Abigail Little.
John, not surprisingly, with those solid gains for the major averages, we're looking at a risk-on sector composition. Let's go into the Bloomberg terminal and take a look at the IMAP function on the S&P 500. A great way to see what's happening at a sector level on any index. And you can see all green on the screen. All 11 S&P 500 sectors are higher. The worst sector, consumer staples, of course, a defensive sector, up 0.6%. The other 10 sectors are up by 1% or more. Now, interestingly, the top sector is energy, up 4.3%, conceivably in sympathy with the beaten down sector there that you've been chatting about, plus oil rallying on the day. The next two sectors, though, pretty interesting. Tech up 2.4%. So we have some of those big tech names such as Microsoft and Apple trading higher. And then the communication services sector also higher, up 2.3%. Now, behind that, Facebook and Google. Facebook is up more than 6%. This has to do with the strong ad revenue growth at Snap. But, John, over the last 4 days, this is sort of interesting. If we take a look at a 4-day chart of the FANG trade, the New York FANG Plus Index, take a look at that, down 1.9%. Into today, 3 down days, the first time we've seen that in 5 weeks. Today, higher, but not enough to overcome that weakness. This, of course, is that big momentum trade. So if this area is not able to get out of its own way on the week, it could be a down week. An interesting tell on the markets overall, again, because the markets have been following those momentum names. So, again, right now, headed toward a down week, John.
Abigail, thank you. The latest on the sector price action. I'm going to bring it back here and go back to where we started this program and think about a really interesting theme. How much downside is there in something like equities, and how much upside is there in something like treasuries? This is what Goldman had to say. This is their quote. Selling calls on bonds to fund equity option protection still looks attractive at this stage. After the strong rally and with policy rates close to the effective lower bound, the potential downside for equity looks larger than the upside on bonds. I want to have this conversation right now. Kevin Giddis of Raymond James joining us. Kevin, what do you make of that? That the downside for equities is larger than the upside of bonds at this point?
Well, John, I think that there's some credence in that, and it's more from the Treasury standpoint than the equity standpoint. I think that we have the ability to see yields fall another 10 to 15 basis points, but not much further than that. So, our own forecast would be to something closer to 1% on 10s versus something below 40 basis points on 10s. But it is going to be driven by the risk-on and risk-off trade. Right now, I think the risk-on trade is okay with the Treasury market. What we don't want to see is a credit period that we saw from March the 9th to March the 23rd when it was more of a fear trade than it was anything else. So I think we're stable in credit, but I do think there is a limited downside in yields over the next few months.
With that in mind, Kevin, where does the demand for treasuries actually come from?
It's coming all over the world. I think if you look, the strength of the dollar is driving a lot of this.
Order
as well.
submitted.
You saw that in Spain and Italy, they both floated notes in the 10-year area. At 2.25 in Italy and 1.16 in Spain. These were issues that were trading at 25 basis points and roughly 1%
Order
in March.
filled.
So I think what
Order
we're seeing
submitted.
is
Order
that
submitted. Order
the demand
filled.
is global for treasuries, even though it may not push yields that much lower.
You mentioned that period in the middle of March. A lot of people don't think we can repeat that. One thing that this period has in common with that period is the collapse in commodity prices. We have had a huge price shock, a demand shock as we shut down these economies, but a huge price shock in the last couple of days in the oil market. And so far, Kevin, I have to say, it's been pretty contained given how big the move lower in crude has been. Do you expect it to stay that way?
I do, John, because what's different about that period and leading up to now is the Fed and Treasury's response to this. And it wasn't even so much that these programs had to come online, it's just that they had to be available. And you saw that through the 8 to 10 programs that were, some were 2008 era programs, some of them are new programs, and all designed to create functionality, liquidity, and a bid-ask spread that wasn't present in that period that we were talking about. So I do think that it really is different. I do think that the Fed's growing balance sheet will continue to support the markets, and the markets can lean back on raising cash either through the new issue market or through a broader secondary trade. So I don't see a period that takes us back to that
Order filled.
fear trade
Order
that we saw in early
submitted.
March.
Order submitted.
The faith in the policymaker
Order
relative to
filled.
the faith in the policymaker 6 weeks ago is night and day. It's absolutely remarkable how many people have faith in the Federal Reserve, in the policymaker down in Washington to build a bridge to the other side. Kevin, what is increasingly interesting from my position is how many people now are talking to me about emerging markets. I caught up with Invesco a little bit earlier on, who were talking about EM and piggybacking off an opening over in China and things getting better. I don't even think we've started to see the shock reverberate through EM have we? We've had another price shock through crude. There's going to be real stress on those economies and very little that they can do to respond to it. Kevin, have we started to see the real pain that could emerge in emerging markets?
You know, John, it was just before the crisis started. I was writing a white paper on EM as a very positive investment because I thought that the inflation in those countries was going to remain low and they had decent growth prospects for the coming year. And I thought oil at that time was going to be fairly stable, as well as a little bit of a weaker dollar. All of those are components that matter to an emerging market debt issuer. What we've seen is almost the opposite. Oil has collapsed. The dollar has gotten stronger. The pandemic has created widespread disasters in economies and balance sheets everywhere. So it's the IMF is looking for less actually of a decline in some of the EM spaces in terms of their economic decline and their chances to rebound than maybe even in the U.S. But it is a market that I would steer clear of right now, especially with how strong the dollar is and how energy seems to be less than stable, at least until it stabilizes, which means we could be 6 to 9 months before that looks like a real attractive area from my standpoint.
Kevin, I wonder if the same applies to Europe as well, because when it comes to policy response, collectively, as a whole, the continent has struggled to get its act together. And what we've seen on the periphery is yields start to move out on Spain, start to blow out in Italy. At those kind of levels, you will get demand when those companies, those sovereigns come to market. We had, I think, 82 billion euros worth of demand for the Spanish sale, record demand for the Italian BTP issue in the last couple of days as well. Kevin, your thoughts on the periphery in Europe and how things are evolving in the last few weeks?
Yeah, undoubtedly, this is going to put a lot of pressure on the EU to support much higher debt yields in countries that are struggling to, and we're struggling to get their economic footing prior to the crisis. So I think this is going to be a challenge in the EU for the next year or two. And they have limited themselves to a number of responses, but something that's far different than what the Fed did in the U.S. So I do think. As you say, the cost of financing this is going higher, and it's going to continue to put pressure on those that tend to be the largest supporters in the EU, like Germany.
Kevin, always great to get your views on the show. Thanks for joining us. Hope you and yours and the whole of the family are doing well. Kevin Giddis there of Raymond James. 23 minutes into this session, your equity market advancing by 1.65% on the S&P 500 as we get a little bit of a break of the last couple of days and the move to the downside as crude firms up just a little bit. The volatility nowhere near over. From New York, this is Bloomberg.
Order submitted. Order submitted.
25 minutes into the session this Wednesday morning, equities advancing by 1.4% on the S&P 500. The story as follows in New York City. We advanced by, call it 1.6% on the S&P, up by almost 2% on the Nasdaq as well. That's your price action. Your day ahead, the next several days ahead, shaping up as follows. At 10:45 a.m., Secretary Mike Pompeo holding a news conference on the coronavirus. Then the task force holding its only daily update from the White House at 5 p.m. EU leaders holding budget discussions on Thursday. Plus, we'll get initial jobless claims, new home sales, and PMIs from the United States and the Eurozone as well. Taking us through to Friday, the University of Michigan releasing consumer sentiment numbers, and we get durable goods orders as well. That's the next couple of days ahead. The next 24 hours for me is absolutely crucial. Tomorrow morning, we'll be poring over some ugly labour market data once again. It could be another 4.5 million jobless claims on top of the 22 million that we've seen in the previous 4 weeks. That data will come on the same day that the House is set to pass another huge amount of aid to help small businesses. Let's hope that data, if it does anything at all, focuses minds to do a whole lot more. From New York this morning, good morning. This was the Countdown to the Open. This is Bloomberg TV.
Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order filled. Order filled. Order submitted. Order submitted. Order filled. Order canceled. Order canceled. Order submitted. Order submitted. Order submitted.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects to target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things.
Order
but
filled.
They're a big
Order
machine.
Submitted.
And there's gaps
submitted.
in that thing. And you're seeing one of the gaps
Order
here.
filled.
And we
Order
help fill
submitted.
that hole.
Order submitted.
These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine.
Order filled.
I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health
Order
team
filled.
To come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome.
Order
He's
submitted.
all day in bed.
Order submitted.
The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet. So we need a refill of this medication. After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
Order filled. Order submitted. Order submitted. Order filled.
I'm asking about why he's alone right here. He said things in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order submitted.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Order filled. Order submitted. Order submitted.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education.
Order filled.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically.
Order canceled.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Order canceled. Order canceled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order filled.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16,
submitted.
but 2
Order
years later
submitted.
dropped out
Order
to marry her high
submitted.
school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
Order submitted. Order submitted.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that
Order
too big
canceled.
to fail
Order
has
canceled.
become
Order
too big
canceled.
for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act.
Order filled. Order
In 2016,
submitted.
after
Order
staying silent
submitted.
during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Order filled. Order submitted. Order submitted.
I have not.
How about $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order canceled.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained
Order
the ringleader
cancelled.
of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy, and I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
Order submitted. Order submitted.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010. Then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Order submitted.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims,
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Order filled. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order filled.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles.
Order canceled. Order canceled.
But
Order
perhaps
canceled.
the biggest advance
Order
will be
submitted.
a huge reduction
Order
in communication lag time,
Order
known as
submitted.
latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia.
Order submitted.
Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. This became impossible almost from the start. And from that very moment,
Order submitted. Order submitted.
That's when Putin gave the oligarchs a choice.
Order filled.
Putin's way.
Order
Some
submitted.
of those people from the
Order
90s
submitted.
managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
he pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin.
Order submitted.
Over the next few
Order
years,
submitted.
Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO.
Order submitted. Order submitted.
This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers.
Order filled.
As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC come to China, come to us, say,
You 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell out, baby.
Order submitted.
And I see
Order
beers
submitted.
from
Order
Germany,
filled.
beers from
Order
USA,
submitted.
beers from
Order submitted.
Japan, but there's no beer from China.
So he
Order
searched for the
filled.
word China
Order
instead
filled.
and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强他的硬件，强就强他的系统建设，这方面确实比我们早。但是玩信息玩软的，中国人的脑袋绝不比我们差。我们在座的所有人的脑袋绝不比我们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, not the world, of course, that's Palantir.
The incredibly controversial secret of data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Value-Ag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems,
Order submitted.
It is less
Order
crazy
submitted.
than the
Order
condition
submitted.
of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order canceled. Order filled. Order filled.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap
Order
heat in the Earth's
canceled.
atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all
Order
pledges
submitted.
are met, the globe
Order
is expected
submitted.
to warm by as
Order
much as
submitted.
3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order canceled. Order canceled. Order filled. Order filled.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth.
Order submitted. Order submitted. Order filled. Order
There's just
submitted.
a variety of challenges that come up inherently in working with glass.
Order submitted. Order filled.
Glass can crack due to stress.
Order submitted.
And sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire of the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind.
Order canceled. Order canceled. Order
I think
submitted.
I work with neon
Order
because
filled.
I can't not
Order
work with it.
submitted. Order submitted.
It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are being settled.
Order filled. Order filled.
Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer.
Order filled.
And we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
Order canceled. Order submitted. Order submitted.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. It's spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it.
Order submitted. Order filled.
It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Order submitted. Order submitted. Order filled. Order submitted. Order submitted.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Order filled.
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating.
Order cancelled. Order submitted. Order
找他
submitted.
自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力，所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
Kyle and Klaus, a couple who have come out, live streaming on Blued means something
Order
different.
filled. Order
其实
submitted.
我经常会
Order
收到
submitted.
很多粉丝的一些互动的留言，
就是类似，就是说你们让我们看到了同志情侣之间的一些希望啊。我看到这样的留言，我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among
Order
gay men.
submitted.
A
Order
third of the
submitted.
company's staff are
Order
dedicated to
submitted.
screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力 ，Blue 能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order filled. Order filled. Order submitted. Order submitted. Order filled. Order filled. Order filled. Order submitted. Order submitted.
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I like, you know, I just kind of figured it out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, yeah, it was, you know, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Order filled.
Before 88
Order
Rising
submitted.
officially launched,
Order submitted.
Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick like 2 weeks later.
Dat Stick
Order
was
submitted.
Brian's first ever
Order
attempt
submitted.
at making
Order
a rap
submitted.
song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling
Order
you
filled.
Rich Chiga on
Order
my phone,
canceled.
Rich. He gets,
Order
Brian,
canceled.
he gets like super
Order
pissed off that
submitted.
he's saved in
Order
my phone as Rich
submitted.
Chiga. He's like, dude,
Order
am I not a human
Order
to you?
filled. Order
What's good, bro?
canceled. Order canceled. Order
you doing?
canceled. Order submitted. Order submitted.
How was
Order
it?
submitted. Order filled.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that kind of I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, and it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a chigga like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the
the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
Order submitted.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for an independent release, and he's like a brand new artist.
Order filled.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chiga. I want to touch him.
What do you guys think of Joji?
He's my
dad, son. That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Order canceled. Order submitted. Order filled. Order submitted. Order submitted.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we've created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade. Oh.
So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger.
Order canceled. Order canceled.
a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board. Thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work. I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
Order submitted.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
Order submitted. Order submitted. Order submitted. Order filled. Order submitted. Order submitted.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
Order canceled. Order canceled.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけど。
Order canceled. The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになっていて、初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order filled. Order submitted. Order submitted.
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
Order canceled. Order canceled. Order submitted. Order filled. Order submitted. Order submitted. Order canceled. Order canceled.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
Submitted.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone it's a girl, superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like,
Canada.
Is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Order submitted. Order submitted.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with this company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like the Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
Order canceled. Order canceled.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Dara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers. Yeah. Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit, because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of...
Profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that?
Order canceled. Order canceled. Order canceled.
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy, because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is
Order
that
canceled. Order canceled.
Growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about the trade-offs that we have to make.
Order submitted.
We have to be a little more patient sometimes, because working with governments, regulators, etc., sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent, and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, etc., but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
in
mean
means
to a layman like
feathering
me?
Mean
crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber. There will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely
Order
key.
canceled. Order canceled.
Sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So
Order
in the
canceled.
end,
Order
you have to be
canceled.
held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the
Order
market
submitted.
for us, but
Order
it also
submitted.
opens us up to many more competitors.
Is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong
Order
autonomous
filled.
technology.
Order submitted.
But what
Order
we think
submitted.
which is exceptional
Order
is
filled.
having autonomous
Order
technology
submitted.
and the
Order
network
submitted.
under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
La conexión se perdió.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Wednesday, April 22nd, 2020. It's Earth Day. I'm Carol Masser along with my co-host Jason Kelly. And Jason, we've got stocks actually up after a couple of down days. Airlines leadership, new stimulus, certainly front and center. And we've got a roundup of leaders to talk about all of that.
Well, and it's interesting to think about sort of this collision of sorts of earnings, maybe a little bit of optimism on the health side that we're starting to see, and as you say, more rescue financing coming from the government, and we've got it covered from all sorts of angles. A lot of leaders weighing in throughout the next few hours.
All right, first up, let's get a check on your top business stories, and really, let's get a check on that trading day. Here is Charlie Pellet.
Thank you very much. Here's what's going on. Green on the screen. Stocks halting, as you mentioned, a 2-day slide. Investors digesting the latest round of corporate earnings. By the way, we'll be hearing from Alcoa, among many other companies, after the bell today. Also, a lot of optimism about the eventual reopening of the economy. Oil rising from record lows. Let's begin there. West Texas Intermediate crude up now by 1.9%. Looking at an advance, actually up by 20.5% on WTI now, up $2.33 a barrel, $13.89. Brent up 5.2%, $20.33 for a barrel of Brent. Gold up 1.7%, right now higher by $28 the ounce at $17.14. The 10-year down 17/32 with a yield of 0.62%. S&P up 62, up 2.3%. The Dow up 458, up 2%. Nasdaq up 228, up now by 2.8%. Lots going on. That is the latest from the market desk. I'm Charlie Pellet. Now back to you, Carol and Jason.
All right, Charlie, thank you so much. This portion of Bloomberg Business Week is brought to you by Commonwealth Financial Network. For the 6th straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial firms. Visit commonwealth.com to learn more. And coming up, as we mentioned, Carol, we're going to hear from the Speaker of the House, Nancy Pelosi. She caught up with David Weston. We're also going to talk to the chairman of JetBlue, a legendary investor who's worked all over the world, Henry Cornell. Also, a couple of CEOs, and I'm going to say it, and maybe you're going to be upset with me, the author of my favorite book.
I know. Actually, I believe it's the author of Alice's favorite book, but we'll talk about that. He's also doing some incredible work when it comes to individuals who have been incorrectly, wrongly incarcerated. So we're talking about Jason Flom. He also is the founder of Lava Records. So looking forward to see what he has to say. First up, though, let's set the Business Week agenda on this Wednesday. Kriti Gupta, is Markets Live reporter at Bloomberg News. She's back in our Bloomberg Interactive Broker studio. Dave Wilson with us, stocks editor at Bloomberg News on the Access line in New Jersey. So, Dave, let's start with you. Set the tone, because we've had a couple of down days this week so far, but we've got a rally underway.
We sure do, and it's a pretty broad-based one as well. I mean, you look at the 11 main industry groups in the S&P 500, they're all higher. You know, technology stocks leading the way, which we've certainly seen a lot of over time. Energy companies doing relatively well, too, which we haven't seen, especially in light of what the oil market has been through lately. So, you know, a bit different on that score. Some well-received earnings reports. I mean, you've got the biggest gain in the S&P 500 for Chipotle Mexican Grill. Their numbers were out late yesterday. People like them. Similar story with Snapchat's owner, Snap. So you're seeing social media companies do well. Facebook has that going for them, plus the fact that they invested $5.7 billion in an Indian company trying to expand their business there. So, you know, put it all together, I mean, there's certainly a lot of positives to sort of counter the negatives that we dealt with the last couple days.
Yeah,
absolutely.
Definitely a different tone, right?
Absolutely. And one of the big negatives, obviously, has been this oil trade. We've all been looking at it, trying to make sense of it. Kriti Gupta, come on in here. Give us the latest, and also the necessary kind of why it matters to not just an everyday consumer, but an everyday investor, this move downward that we've seen in the oil market.
Sure. So what's been notable about this week, Monday, crude prices dropping into negative territory, a historic moment, of course. We all kind of know that happened. What's really important to note, though, is it happened because of ETFs. And what I mean by that is essentially investors, I'm going to break it down here, make it really simple. Investors basically came into the market, bought ETFs through the stock market, and held on to the underlying oil contract. So these people that are kind of pulling the price lower on crude aren't actually your traditional commodity investors. They're actually stock investors. They're your traditional mom and pop, day traders. You know, your friends investing through Robinhood. It's those kind of people that are actually driving oil lower, and they were on Monday. And what's interesting is they're actually trying to call a bottom in oil prices because they're just in disbelief that oil prices can even be this low. So you're really seeing the ETF world, the stock world kind of collide here with the commodities world.
Yeah. Okay. So that's what's going on here. I mean, it's really been kind of a wild week when we look at what we've seen in the energy market so far, where we are in the equity markets. Dave, I want to ask you, do you feel like we're starting to get folks thinking about, okay, what happens after this? What does it mean for companies? What does it mean for earnings? And ultimately, what does it mean for the financial markets? And I do wonder how much of that optimism is already to some extent priced in.
Well, there's an element of that, no question. There's also an issue of what does the here and now look like? And I come back to Snap because, you know, you think about companies like that, and Facebook and Twitter certainly qualify. You know, a lot of their business comes from advertising, and we've seen more broadly that the ad business just isn't what it was before the coronavirus really hit because business isn't what it was. So the idea, you know, that Snap's numbers, look relatively well to investors, I mean, that tells you something. Plus the fact that there's, shall we say, a lot more engagement with these kinds of sites, simply because people got to have something to do while they're sitting at home in a lot of cases. So, you know, you have that in the backdrop. As far as what happens in the future, I mean, we're still seeing companies left and right withdrawing their forecasts for the year, so it gets kind of hard to get a handle on that. I mean, a company like Kimberly-Clark, which, let me tell you, they're selling toilet paper, so you know they did okay in the first quarter.
Right.
They're pulling out their forecast for the year and suspending their stock buybacks, so no surprise there. Put it all together, I mean, once you get past where we are now, I mean, it's still sort of a murky outlook.
I don't know why anybody would leave a forecast out there at this point.
Yeah, why you don't have to at this point, right?
It is far from required, and I would say it's bordering on discouraged. So, Critty, last word to you. Play this out, what you mentioned with oil and ETFs, because this is bigger than the oil market in many ways, and this is a world where an individual investor is pretty worried about his or her retirement.
That's right. And it's actually what's interesting here is this kind of collision that I mentioned earlier about kind of the stock market and the oil market. You're actually seeing it play in reverse too. So you're actually seeing not just the stock market and these ETF exposures hit the energy market, but vice versa. I mean, the energy market has really been kind of that second punch and the 1-2 punch that markets were really dealt with after the virus, that price war really hitting that. And you're actually seeing that sentiment reflect in stocks as well. So now this kind of commodities only story has really become a sentiment story as well. And that's why you kind of have your regular 401k people really worried about kind of what this means for their futures.
Add to the list of markets with dislocation as a result of the virus and maybe some other deeper things that have been going on in the financial markets.
All right, Critty Gupta, thank you so much. Markets Live reporter for Bloomberg in our Bloomberg Interactive Broker Studio. I haven't said that in a while. Dave Wilson, stocks editor for Bloomberg, will be back with our chart and stock of the day in just a bit. You want to do the bite?
Yeah, let's do it. The Bloomberg Business Week Bite of the Day. One number that tells us a lot. Today's number, nice and round and big, $10 million. Amazon says it will contribute $10 million, Jason, to projects designed to encourage sustainable forestry in the Northeast U.S. that includes a program that connects smaller landowners to carbon credit markets to protect land from the development of agriculture, which is, you know, kind of appropriate this bite on Earth Day.
Yeah, absolutely. I love to celebrate Earth. And
10 million.
listen, you
10
look.
million. How much is that company worth?
Yeah.
Sorry.
We'll see.
Not to look a gift horse in the mouth.
That's right. It is amazing.
I'm in a tough mood today.
Buckle up, everyone.
Get ready.
I know I am. All right. A lot more ahead. We're going to hear from top minds in investing, in transportation, and in the record business even. But before we get to any of that, let's get the world of national headlines. For that, we turn to Bob Moon. Hey, Bob.
Hi, Jason. As parts of the U.S. and other countries begin to reopen, the World Health Organization is today warning anew that most countries are still in the early stages, and what's more, the UN group says some countries are seeing a resurgence of cases. In Geneva today, WHO Director General Tedros Adhanom Ghebreyesus says the virus remains extremely dangerous.
Make no mistake, We have a long way to go. This virus will be with us for a long time.
President Trump on Twitter today said he has instructed the Navy to, quote, shoot down and destroy any and all Iranian gunboats if they harass our ships at sea. Last week, small Iranian gunboats came close to U.S. Navy ships in a manner the Navy called unsafe and unprofessional. At today's Pentagon briefing, Deputy Defense Secretary David Norquist said the president is sending Iran a message.
What he was emphasizing is all of our ships retain the right of self-defense, and people need to be very careful in their interactions to understand the inherent right of self-defense.
President Trump did not cite a specific Iranian provocation in his tweet or provide details. Senior Pentagon officials gave no indication that Trump had directed a fundamental change in military policy on Iran. Global news 24 hours a day, on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Bob Moon.
Bob, thank you. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser. Well, neither of us has been on a plane for a while, but I can tell you, when I traveled, I hated the middle seat. I mean,
listen, think
I
about
would
what we
get
had to
so neurotic, like checking my seat ahead of a flight, even if it was a
Right.
relatively short flight. Just brutal.
Yeah, exactly. Like, I'll take a seat that doesn't recline over a middle seat. Like,
Oh,
it's just, think
hundo
about when we had
big.
to book something really late.
Yeah.
And, it's like, it's the middle seat. So listen, here's
Plus,
what's
we
going
have
on.
that rule about not sitting with each other.
That's right.
So
we
that
never-
makes it even more
we can't-
complicated.
We already were doing social distancing before you had to do it. I'm just going to say.
That's true. Except for the 4 hours a day that we were sitting next to each other in the studio.
This is true. This is true. So United Airlines is going to begin blocking middle seats in all of their aircraft cabins, and it's all about social distancing. They're going to change their boarding process also to give passengers more space as they walk into a plane. They're going to process all seating upgrades at the airport to better control crowding. These procedures go through May 30th. Delta's already been blocking middle seats, except in first class. They started doing that earlier this month. That's going to be extended through June 30th. And they're also going to now board passengers by their seat row, starting from the rear of the plane, which kind of makes sense in general. But it's interesting. They expect more of this social distancing. You're going to see it into May, into June, as schedule, reductions take effect. And, and as we see, this curtailed service putting more passengers into fewer flights. Like, so they're going to have to adjust. They're going to have to figure it out.
Yeah. Well, and we're all going to have to adjust. This is one of
Yeah.
the things that's really going to change. And, after 9/11, obviously security in the airports changed. And there were some things that changed on the planes, with the cockpit doors and things like that. But, this could really fundamentally change not just the logistics, but the economics of air travel. Because if you're taking a third of the seats out,
right?
Obviously supply-demand comes into it. But in any case, we're going to talk to the chairman of JetBlue later on. We're going to talk to him about all of these things.
Yeah, what the math is on it, because it's a tough one, and this really hurts them big time. All right, you're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletta. An update on Wall Street. Stocks halting a two-day slide as investors digest the latest round of corporate earnings. Also, there's optimism about the eventual reopening of the U.S. economy. We've got crude oil rallying today. West Texas Intermediate looking at an advance now of 22%, back above $14 a barrel on WTI. The S&P 500 index is up now by 60 points. That is a gain of 2.2%. The Dow up 439, up 1.9%. Nasdaq up 224 points, higher by 2.7%. 10-year yield 0.62%. Gold up 1.8%. 17.16 the ounce. So again, recapping, S&P higher, rest of the market rebounding, S&P up by 2.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. It is Wednesday. It is sunny out, thank God. It's really nice. But one of our main stories today, yes, it is cold.
Too cold.
Yeah, I agree. But the skies are at least nice and blue and beautiful clouds. I got to say, though, one of the stories and one of the main stories on the virus today that's a little maybe disturbing, and maybe we just need to kind of understand it, is about how the first U.S. virus case came weeks before previously thought. Here with our daily coronavirus update, Drew Armstrong. He is team leader for U.S. healthcare at Bloomberg News. As we've said repeatedly, you have got to check out all of the coverage that has been led by Drew about the virus, really keeping us informed. Drew joining us once again on the phone in New York. Drew, good to have you back with us. This story about the first case coming weeks before previously thought, my daughter and I were actually having a conversation about this. Like, you know, people said, oh, I think I had the virus. Well, why didn't we see more cases than earlier on? Help us understand this and what's the significance of this?
Well, I think, you know, what you're actually seeing here is the, you know, final effect of what we've known for a long time was a really, really lackluster testing situation in the United States. You know, people complain about the testing not being sufficient now, but if you look back to February, when we know that we were seeing the very first trickle of identified cases, the only testing that was happening was actually being done by the CDC. State and local public health labs did not have their own tests. When they finally got those tests sent by the CDC, they didn't work. It took essentially a month for real significant, more widespread testing to happen. And so now all of a sudden, we're looking back and we're finding more and more people who did have these infections, and additionally finding some of these first early deaths. You know, we were also at that time in the middle of a reasonably active flu season, which may have masked some of the cases that may have been circulating early. So it's a hint at how much we don't know, and that amount is definitely quite significant, I think.
And Drew, you know, we were talking about it in my house this morning too, because it feels like one of these things that really could dramatically change the narrative and the reality going forward. Is there a positive read on this that basically says this was circulating a lot, this was in the population, we had a lot of people who had either mild or medium symptoms, and as you say, may have thought they had the flu, but really they had this, that will maybe portend a broader immunity or a broader ability to sort of deal with this in the short and midterm?
I wish that was the case, but if you look at some of the research that's been done out of that area, and you know, I'll preface this by saying some of these studies I'm about to discuss are pretty controversial. There's been some criticism of their methods, but you know, there have been findings that as many as 4% of people in Santa Clara County and in LA may have been affected by this. There's some variances in those estimates, but they're around that mark. And, you know, that tells you that, yes, this virus was here. It was probably circulating to some degree if we believe that those studies are accurate. It doesn't really provide any reassurances on, things like herd immunity, which you need, 50, 60, 70% of the population to have, been infected and have a level of immunity in order to reach that. There is a tremendous amount we still don't know about that. You have to have quite a bit of penetration of the virus or have a vaccine that essentially replicates that process. And I don't think that there's any thinking at least in the places where we know about that level of penetrance, that we're well on our way to any kind of immunity, of widespread immunity here.
Right.
So much for my optimism there, Terrell.
Well, see, and one of the conversations we were having is that, okay, I mean, I thought I maybe had it because some of the symptoms, but maybe not as severe. And this was back in, I don't know, was that February, right? So I've had family say that they thought they had it around the holidays. If it's the case that maybe people did have some form of it, but not the extreme or severe case, should we have expected, Drew, that the numbers would have ramped up much more quickly? Or does it say something about that we do have a greater immunity than we all realized maybe to this virus? I'm not quite sure what to make of it.
Well, I think what's really important to remember is that 99% of people or so do appear to recover just fine from this virus. Our immune system is very good overall at reacting to this. There are a large number of people who are asymptomatic to it. So it doesn't have, anything necessarily to do, as far as we know, with, one strain or another being milder or weaker. It's just that some people get sicker than other folks. And who gets sick and why is one of the big unanswered questions out there. I think we have some explanation of that in terms of pre-existing conditions and age and all that sort of thing. But, we still don't really have as comprehensive an answer to that as we would like. So we know that has been happening. I think you also look at the differences between, a place like Southern California and like New York City. You guys live here. You know what it was like before we were all staying at home. Everyone's packed in on subways. There's just a huge amount of population density, shared surfaces, all those things. Last time when I was in LA, I spent the entire time driving around in my rental car. There's just not a tremendous amount of, you just don't, if you think about this virus as something that transmits by people being really close to each other and touching the same stuff, the way your city is built and organized and how people interact really, really matters to that. And I think that that's very, very important as people try to interpret why are outbreaks in some places worse than others. If you think about how people live in a, widely dispersed suburb in a, in the southern part of the country where I have, relatives, you are already practicing social distancing just in the course of your normal life compared to what we do every day in New York City.
Yeah, absolutely. It's a great point, and we certainly are going to be looking at that.
That's why the responses are so tough too, right? In terms of every city, every state, can be very different in terms of what they're dealing with and how do you respond. Drew Armstrong, thank you so much, and I do highly recommend our listeners check out all of his coverage and his team's coverage at Bloomberg.com. He's team leader for U.S. Healthcare at Bloomberg News on the phone in New York. Coming up, got to talk about those airlines. This is Bloomberg Radio.
Order filled. Order canceled. Order submitted. Order filled.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to talk airlines. Delta coming out with their numbers. What do they tell us about the industry, the company, and the future of air travel? George Ferguson from BI is going to be along to answer those questions. First, Charlie Pellet's going to answer all our questions about the trade. Hey, Charlie.
Well, here's what's going on. We've got the Dow, the S&P, and Nasdaq. They're all rebounding today. Sharp contrast from yesterday. Let's begin with crude oil. That is the standout, with West Texas Intermediate crude surging 21% today, now at $14.03 a barrel. Part of that, heightened tensions with Iran. We've got the 10-year down 17.30 seconds, a yield there 0.62%. Gold up 1.7%, 17.14 the ounce. You mentioned some of the airline names. Delta, for example, after earnings, down now by 3.3%. UAL down 8%, taking out those middle seats. We've got American down 7%. Southwest dropping today by 1.5%. The Dow up 463 points, up by 2%. S&P up 64, a gain there of 2.4%. Nasdaq up now by 239, higher by 2.9%. One of the big challenges for health professionals in fighting COVID-19 is increasing the number of tests and getting those tests to the right people and places. Dr. Lawrence Sauer is a professor of emergency medicine at the Johns Hopkins Bloomberg School of Public Health.
Testing is going to be critical to ending this lockdown, and then you link that testing with quick access to care, contact tracing, which is identifying people who had contact with people who are sick, and making sure that they stay isolated or quarantined if they're not sick until they pass their possible window of getting others sick.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Treasury Secretary Steven Mnuchin says he anticipates most of the U.S. economy will restart by the end of August after the coronavirus has led to social distancing measures that have shuttered many businesses. He made the comment this morning.